trends in markets. Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
In 2000, post-Napster, generally everybody wrote off the recorded music industry, including the investment community. And I didn't mind that chapter because then I got left alone. And actually, I think out of that period, we started to create better art because the pressure wasn't on from the technology to be the most powerful chapter. And then iTunes came in, and iTunes, to Apple's credit, did have a boutique taste mentality about the store, which meant that I think they understood. I can tell you from that period that the artists that came through were of a very high quality because it was encouraged to be boutique. Now, ironically, this chapter has made us more money times 5 than the iTunes chapter and the post-Napster chapter. But an algorithm tells you what you want, not what you might like. And there's a difference between what you want, but with streaming, the downside is you have incredible penetration, and we have hundreds of millions of people around the world. And so that has been very lucrative as a business.
What makes it India's time?
It's us women who are going to transform India. I truly feel that the time for Indian women has come. They're not only breaking glass ceilings, but they are redefining, whether it is in sport, whether it's in medicine, whether it's in creative arts. They are everywhere, and I have so much positive energy that comes back to me when I'm talking to Indian women. And I just think at all these little girls and boys, I don't want to discriminate, who are now in school-going age, imagine once education, sports, we empower them. What a difference they would make not only to India, but to the planet and the world. And the world needs it now than ever before.
Bringing you up-to-the-minute tech news whenever and wherever it happens. I'm Ed Ludlow in Las Vegas, and this is Bloomberg.
Futures drop to kick off the week. 30 minutes until the start of cash trading. I'm Matt Miller.
I'm Shonali Bassick.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
Coming up, no pain, no gain. President Trump declines to rule out a recession and says that the U.S. faces a period of transition.
A chorus of Wall Street strategists is warning about higher stock market volatility, with Morgan Stanley's Mike Wilson the latest to sound the alarm on the growth fears.
And as a sell-off in tech intensifies, industry executives head to the White House today to discuss trade policy and U.S. manufacturing. I'm sure we'll have plenty to talk about, but let's take a look at where these markets are trading. Last week was ugly, down 3% on the S&P 500. We saw a little bit of relief on Friday, but we're right back to the pain machine today. The S&P 500 off by about 1.3%. We had President Trump talking over the weekend about this period of transition that the economy will go through. You see the transition to the downside in the S&P 500, in the NASDAQ 100, with big tech currently off by about 1.6% pre-market, sending a bit of a bid into the bond market right now, which has also been all over the place. The 10-year Treasury yield currently down about 5 basis points. Matt Miller, we are still above 420, though.
Yeah, last week we saw the first increase in yields, weekly increase in yields in about 2 months. We're headed back down today. Take a look at this index. It's the New York Fed's probability of a recession. It's a forecast out 12 months based on the Treasury yield curve. And what's interesting is this red circle is around the third biggest spike that we've seen in the last 40 years. This chart goes back to 1985. So the chances of a recession in the third quarter, at least according to this index, are high, although you could see that the chances of a recession in the second quarter of last year were even higher. And of course, that didn't pan out.
Yeah, it's kind of troubling that the recession probabilities are so volatile as well. Seriously, the conversation has turned quickly lately, Matt. Also turning quickly, looking at Tesla pre-market, leading the losses really in the Magnificent Seven alongside NVIDIA. Tesla down 3.8% pre-market. Novo Nordisk as well, brutal, now down more than 8.3%. The shares are falling after results from the company's latest weight loss shot disappointed. We're also watching Redfin. Amazing to see M&A Monday turn up here. Redfin up now 68% after Rocket agreed to buy the real estate listing company for $1.7 billion. We're going to speak with the Rocket CEO in the next hour. I've got to say, he did buy this company on the cheap when you look at the 5-year stock, guys.
Yeah, but not if you look at Friday's price, right? It was trading at less than $6. So if you're in Friday, you got more than double your money today. We're going to talk about that because I think the real estate market is especially interesting. Residential real estate market is especially interesting right now. What happens if we go into a recession? I think is a question a lot of people are asking themselves, and you're starting to see more doom and gloom out of the White House itself, right? Donald Trump refusing to rule out a recession on the Sunday talk shows yesterday, and Scott Besson at the end of last week on CNBC saying that we need to go through a detox period. That sounds concerning.
Yeah, we were talking about this a bit on Friday, that it seems like we're getting this take your medicine messaging from the White House. Mary Poppins would tell you usually that comes with a spoonful of sugar. Up to this point, we haven't really got it, but I do think it's interesting and telling that we just heard from Kevin Hassett on a competing network at 8 a.m. saying that the second quarter, things will take off after tax cuts. You think about the sequencing of some of the priorities of the Trump administration. It's been these market-unfriendly trade policies, but they're still dangling that spoonful of sugar.
You know what we do with our cookies? We keep them above the fridge so we don't touch them. And that's what might happen with the tax cuts as well. We might not see that sugar high. It might be kept far away from us. But you also made a great point this morning for people trying to chase a sugar high across the pond. You're not going to get it for very long potentially either. If the U.S. dips into a recession, you were pointing out from Marko Kolanovic.
Yeah, remember Marko Kolanovic, the JP Morgan bear? He still tweets, which is fun and interesting. He tweeted that basically if the risk of recession is rising in the US, that's not good news for the rest of the world. It's also rising then globally, and anything else is wishful thinking, Matt Miller.
Right, although, you know, they have trillions of dollars in stimulative spending queued up to make up for the defense drop from us. We'll continue to talk about all this stuff. The White House really coming out, firing this weekend, downplaying talk that the U.S. economy is headed towards a recession.
No recession in America. What there's going to be is global tariffs are going to come down because President Trump has said, you want to charge us 100%? We're going to charge you 100%.
I hate to predict things like that. There is a period of transition because what we're doing is very big. We're bringing wealth back to America. That's a big thing. And there are always periods of, it takes a little time. It takes a little time.
I would never bet on recession. No chance.
All right, it seems like Howard Lutnick is downplaying it more than the president. The president doesn't seem to be downplaying it at all, frankly, and neither did his Treasury Secretary Scott Besson at the end of last week. Joining us with more is Bloomberg's Tyler Kendall at the White House. We're getting kind of mixed signals, Tyler, but what's interesting to me is they seem to be softening us up for a recession rather than saying it's not going to happen. How do you read it?
Well, Matt, it appears that the White House's messaging is that there needs to be short-term adjustment in order to see long-term growth. Later on in that interview, President Trump went on to compare the U.S. to China, in his words, saying that China has a 100-year perspective, whereas the U.S. has a perspective in quarters. He then used that as a way to double down on his claim that he is not watching the stock market, though did say he has his eye towards yields. Now, I actually did have the chance to catch up with Kevin Hassett here on the White House North Lawn earlier this last hour, and he reiterated this claim that we're hearing from a lot of senior administration officials, which is until they can get their policies fully in place, then they can't really do anything about the outcome. And that means that they really are banking on a few things happening. Perhaps most pertinent to today's conversation, that's one, using tariffs as a revenue raiser, which goes along with two, which is enacting President Trump's tax cut agenda. But Matt, the latter is not going to be so easy. We know that Republicans are already disagreeing about the timeline for tax priorities, as well as the mandatory spending cuts that go along with them. And that's just in the House. That doesn't even begin to address the differences between the House and the Senate when it comes to putting this together in one big, beautiful bill that President Trump has asked to be seen.
All right, Tyler, thanks very much. Bloomberg's Tyler Kendall there reporting live from the White House. Let's talk about all this with Rick Reeder. He is BlackRock's Chief Investment Officer for Global Fixed Income. And Rick, I noticed one of your charts in a recent note said the government recession has begun. After the jobs numbers that we saw on Friday, federal workers fell significantly. Is that being made up with tax cuts you see in the second quarter? Is it being made up by reshoring of manufacturing?
So, by the way, thanks for having me on. Busy day, to say the least. So I'd say a couple of things. First of all, Matt, you said at the beginning, the market goes through this, or the perspective of recession at the beginning of the year. It's actually been pretty consistent the last couple of years that this seasonal tends to play out, that you start to see some pullback. But there is some reality to some slowing of the economy. That is significant, as you talked about from the government spend side. But you're also starting to see companies that are, quite frankly, waiting to see what tariffs are going to bring, what the deglobalization dynamic will bring. So there is some slowdown. The consumer, I'm more confident in the consumer. I think the consumer spends based on job prospects, income, savings. And so you're seeing a little bit of dip in the lower middle income. I feel pretty good about the consumer will be there. The question is, when do you unlock the coffers of companies? When do they feel confident putting money to work again? And for the near term, I could see them buying back stock as opposed to CapEx. And in the interim, I could see them before you do some M&A to try and understand what cross-border looks like. So we're in this period of stasis in terms of where companies are. And so that is creating more of this disposition around. We could be a bit slower here for a period of time.
Rick, you know, you look at Fed futures and the market has turned pretty drastically in terms of where they see Fed rate cuts for the end of the year, now pricing in at least 3 through December. Do you think that makes sense given where we are right now, or would you look to fade that move?
So I think markets tend to overshoot and markets move with momentum. I think it's hard to fade it today because the data we're going to get, we'll see. And we think the inflation report this week, you probably get a decent inflation report. So there's a time when you go to fade it and time you ride it a little bit, let the markets do what they're going to do. Do I think the Fed's going to cut 3 times this year? I don't. But you got to you certainly have to give it a little bit of patience and some time. The inflation data still is too high. I mean, as long as, and it was interesting to hear Chair Powell speak last week, he says the economy's in fine shape. Economy generally is in fine shape. Inflation's still too high. So, do you get a window to try and reduce? I think they'll get that window. But 3 cuts is pricing in a lot today. But I think you got to leave it alone for a little bit and let rates do what they're going to do.
Yeah, 3 cuts definitely looks aggressive relative to where we were just a week or 2 ago. And when it comes to inflation, we'll get another update in the form of CPI on Wednesday. And it feels like investors right now, Rick, are trying to decide whether they're more worried about growth or whether they're more worried about the inflationary backdrop. So I'll flip that question to you. What do you think the biggest risk is at this point? That we do get some sort of growth scare, or that maybe inflation stays sticky and the Fed isn't able to cut?
I mean, I think what the market, by the way, it was interesting when you start talking about Redfin, because I was going through equities this weekend and a lot of Red financials. And I was pretty blown away by last week how much you had this rally around the deregulation of the banking industry and financials. And all of a sudden, last week was pretty pernicious. Listen, I think what that clearly suggests is the economy is a bit slower. And as you said, both the president and Secretary Bessent saying, listen, we got to go through a bit of an adjustment period, and the financials came under tremendous pressure as a result of that. So to me, it is definitely growth today. From what looked to be some pretty strong growth, all of a sudden some of the data is changing. So I think that's the big change in terms of what happened the last couple of weeks for sure.
I was reading Mohamed El-Arian's column on Bloomberg this morning, Rick, and he says that the Fed should at least consider letting its inflation target float higher. Unlikely, of course, that they will, but they don't seem to care too much about actually 2%. Aren't they fine with 2.5%, 3%? I mean, can't they cut if we're at those levels?
So I think listen, I don't think they'll ever tangibly change what their target is. I don't think they'll ever explicitly suggest a different target. But I think what Mohamed was suggesting is, in the interim, can you absorb 2.5 to 3, particularly if labor starts to deteriorate? I mean, the employment number on Friday was okay, a little bit softer, but you got to watch some of these metrics in terms of, we're going to get a JOLTS report I think will be interesting. You're starting to see some softness show up in some of the areas of the employment market. If labor starts to come off significantly, and boy, I've been studying these immigration numbers, that is quite different than we've heard. We hired, over the last 3 years, a couple of million or so people through immigration. That number is coming pretty close to zero. And so, gosh, if you start to see some softness in labor, Matt, as you described, I think if you were running 2.5-ish, 3, 3's a tough one, but if you're running 2.5 to maybe a little bit higher than that, and employment starts to soften, then they still can cut. But I think they want to wait before they do it, and that's why I think you got to see some more data first.
Certainly that immigration story undertold. I do want to go back, though, to something you were just saying, Rick, and it was about financials, the response that you're seeing here, the ability to kind of boost this economy, even if you do see rates go down. You do see the yield curve going kind of nowhere. I mean, you're looking at a differential of 30 basis points at the moment between the 2 and the 10-year, but we've seen higher than that earlier this year. So if the yield curve does not steepen more, then really what does that mean about the impetus for the financial system to kind of keep on pumping out those loans with greater profits? Do you see an issue here with the trade?
So listen, I think when the Fed, when you start to see the Fed moving, the curve will steepen out. I mean, I will tell you, I've said it before with y'all. I mean, I think the front to the belly of the yield curve is still super interesting. It carries well. When the Fed is moving, you'll start to see that steepening of the yield curve. And listen, do I think the yield curve today is a big impact or a negative shock or influence on the financial system? Not terribly. The bigger one, and I think what people are sort of reacting, do you see charge-offs accelerate? You're seeing a little bit of that. Do you start to see some credit pressure? We've had some pretty easy credit conditions for a period of time. I think that is the near-term impact on the financials as opposed to necessarily what the curve is doing. But listen, I think the curve is going to steepen, and I think that'll happen. It's part of why just sitting and carrying really well in income-producing assets in that front to the belly of the yield curve continues to be a fruitful way to play it.
There's been plenty of folks who have had their hearts broken over that yields curve steepener. But to your point on the financials, the KBW Bank Index had its worst week since the collapse of SVB last week. So it's certainly been brutal. Rick, let's put a pin in this conversation. You're sticking with us. That is Rick Reeder of BlackRock. Let's quickly take a check on futures right now. It is ugly. The S&P 500 down about 1.3%. Losses being led by big tech right now, with the NASDAQ 100 down about 1.6%. And that's after the wipeout we saw last week. And the small guys also feeling the pain today, with the Russell 2000 down about 1.2%. This is Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling.
Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
What is the issue between the type of information that's being collected by investors and the marking issue that you're describing?
What mark-to-market assets do is it forces honesty into the situation. We're talking right after the DeepSeek model surprised everybody in its efficiency. It took hundreds of billions off of market caps because it legitimately raised concerns that maybe the future of AI was different. I guarantee you that if you look at other portfolios that aren't marked, they didn't move. If private assets are going to eat the world, as they say, with the equity market halving in the number of names, you come to a world that is increasingly an echo chamber. Imagine you have a firm that has some public assets and some private assets. If you see your public assets in AI going down by 20%, you're going to be thinking very, very deeply about what your private assets are worth differently than someone who just has the latter.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything.
All right, welcome back to Open Interest. Still with us is Rick Reeder of BlackRock. And Rick, I want to go to corporate bonds, of course. It's a heavy allocation in your ETF, BINC. We had a really interesting story on the Bloomberg terminal this morning that you take a look at the primary market. We had about 15 issuers that are expected to tap the market today, 10 of them likely to stand down according to our latest reporting. So you could look at that and build a case for getting nervous, but then you take a look at high yield spreads, which we have on screen right now, still below 300 basis points, in investment grade below 100 basis points. That seems very complacent relative to some of these headlines we're starting to get now, Rick.
So there's, yeah, like you say, there's a series of interesting dynamics going on in credit today. There's a little bit, as we talked about, equity fatigue. And boy, we've seen it in some of these funds that you were kind enough to point out, Bink, and we're seeing it where people say, gosh, I'm gonna try and take down a little bit of my equity beta and I'm gonna stay in income and I wanna get some yield into the portfolio. And you think about today, as you were describing, the yield curve being flat, yield's still pretty high for credit relative to default rates. If you're an insurance company, pension fund, and you're trying to match a liability, you know, you get, let's say roughly you've got a 7% return target, you know, you're getting yield still today. You can build in credit 6.5, 7 going into high yield, a bit more than that, particularly when you use Europe as part of it. So there's a couple of interesting things at play. One, defaults will stay low relative to history. A lot of companies term their debt out, you know, post-COVID. Credit quality is good. The yields are still attractive. You hit your return targets, you de-beta, as it were, some of your equity risk. So yeah, like you say, credit continues. Even when you get an investment grade, you got a lot of supply in the last couple of weeks. And it's amazing to watch how the markets absorb it so readily. There is definitely a shift into fixed income and particularly yield. And you're watching that play out.
So, you know, just to follow up on that, we're all wondering here, why not wait till spreads widen, Rick? Do you see spreads widening and a better entry point in terms of valuation here?
So it's a great, I don't think I'm too technical about some of the things we're doing, but I don't disagree with that in terms of where these spreads are. Particularly, I actually saw in Europe today that that European spreads, you know, particularly after the stimulus, European investor grade is now trading tighter than U.S. That hasn't happened in a really long time. So what do you do with that? Time to pause. And some of like, would you increase your European exposure? No way. I don't think so at those levels. And so, yeah, I think being a little bit patient around these spread levels and looking at some other areas, agency mortgages are interesting. They're liquid. They tend to participate well with some convexity dynamic, tend to participate well when rates move and when the economy moderates. Securitized assets are a great place to go. You can still do securitized assets at reasonable levels if you don't go into the highest quality part of securitized. So I wouldn't disagree with your thesis around do you add a lot of credit spread. You know, flows continue to be good into fixed income. And yeah, credit's not the first place to race into today at these spreads. I agree with that.
I wonder what you think, Rick. There's a lot of talk about the Department of Commerce and Howard Lutnick disbanding some statistics groups in the government. Obviously, everybody wants bureaucracy to be whittled down, and I don't think that everyone's against the idea of reducing the federal employment base. But that said, you know, Jerome Powell was defending the Bureau of Labor and Statistics. We do need solid economic data to guide us. Are you worried about that?
So, yes, I think we need good economic data. I will say, going back over the last few years, the amount that data gets revised, I'm not sure it's always really good data. I mean, some of these revisions, particularly in payroll, tend to be massive. I tell you, you know, Matt, the way the world is shifting, you can now get data, obviously AI, and obviously be able to scrape the internet, credit card data. I study tons of corporate earnings reports, annual reports, et cetera, quarterly documents, and now AI allows us to do it in a more specific, precise way. So yes, we definitely need the data, the broad data that comes from the government, but you know, the ability to actually expand your universe of how you get the data today is pretty impressive. And quite frankly, a lot of the data we get, you know, using some of those sources, personally, I find companies tell you more about what's happening in the economy when it comes to hiring, inventory management, CapEx. So I tend to study corporate data much more aggressively, and I have for a while, but I still think that's the case.
Yeah, a lot of gems to be found if you scrape those earning call transcripts. Rick, it is always great to speak with you. Really appreciate you kicking off the week with us. That is Rick Reeder of BlackRock. Now, coming up, tariffs, obviously the talk of the town, and we're going to explore how tariffs are hitting retail and the booze biz. And then next hour, a conversation with Dana Telsey of Telsey Advisory Group and Fawn Weaver, the founder of Uncle Nearest, a U.S. whiskey exporter. This is Bloomberg.
Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
To the minute economic news whenever and wherever it happens. I'm Jennifer Zabasanja in Luanda, Angola, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Welcome back to Open Interest. A check on futures minutes away from the opening bell. Shaping up to be an ugly Monday. The S&P 500 off by about 1.4% after a 3% drawdown last week. The NASDAQ 100 leading these losses in the pre-market with big tech off about 1.7%. And then you take a look at the small caps. We've been on correction territory watch when it comes to the NASDAQ 100. A little bit, too, when it comes to the S&P 500. The Russell 2000, of course, is already there. It's been a tough market for these small caps. Now, coming up, less than 4 minutes to go, we'll discuss the market moves with Kara Murphy of Kestra. Up next, this is Bloomberg.
In this facility, which is part of your $2 billion investment in the last 2 years, it's a massive amount.
Yes, because, we've focused a lot on automation and upgrading our quality standards so that we can adhere to the US FDA and European standards, because some of our vaccines now are going even to the West, which is a fundamental shift in our strategy, from back in the day when my father started the business, where we were predominantly in India and the developing
India-centric, now you're more global.
Yes.
So you're about 8,000 strong in this facility? All Indian nationals?
Mostly Indian, yes. I would say 99% of talent that we've trained overseas and in India. We have our own internal skill building center where we train on site.
Serum started with just producing vaccine for tetanus, but is producing a lot more vaccines now. What is the next big thing you think?
A global pandemic flu vaccine is something that we're working on, and I think the world will need that. Not only for the annual flu cases, but God forbid there's a flu pandemic. I think we are very well poised to make 1.5–2 billion doses and roll it out very quickly to protect the world. And we have, of course, the other vaccines, as we talked about, HPV and malaria, that we've just launched, and we're going to scale that up as well.
US tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
We are moments away from the start of trading here in New York City, and futures are low. I'm Matt Miller. This is Bloomberg Open Interest. We're looking at a drop on S&P 500 futures of 1.5%. This after a loss of 3% last week. We're down more than 6.5% from our highs. We're down 2 or 3% year to date. It does not look good for stocks. NASDAQ futures are worse, and Russell 2000 is down. Futures down 1.25%. I will note something interesting. Ringing the opening bell at the New York Stock Exchange, Ireland Inc., no idea who they are or what they do. But look, Wilbur Ross, former Commerce Secretary there, ringing the bell. That's pretty cool. Down at the NASDAQ, We Love You International Foundation. I have no idea. The point today really is stocks are taking a huge hit as investors reassess the risk of recession. Let's get over to Katie Greifeld right now. She's got a look at your live trade. Katie?
Yeah, if you're looking for the Trump put, you're not going to find it on this screen behind me, at least not right now. You take a look at the S&P 500. Like you said, Matt, down about 1.5% after what we saw last week. The index now below 5,700. You have a chorus of analysts coming out and saying that maybe 5,500 is ultimately where we bottom, and there's still a lot of daylight between where we are and where we could go. Same story, too, if you take a look at the NASDAQ 100, off by about 1.8% right now. Big tech really taking it on the chin, as are these small caps, with the Russell 2000 off by about 1.3%. But let's go back to big tech, because that is really the story. Tesla and NVIDIA leading losses among the Magnificent Seven stocks as the broader market sell-off continues to just pick up steam here. You take a look at NVIDIA, down another 2.3%, down 16% year-to-date, Janali. And then you take a look at Tesla, even worse, down 4% just in the first few minutes of trading, down about 35% for 2025.
And Katie, it's kind of interesting because you have that market malaise really stifling a lot of activity, but we did see a little bit of merger activity. We're keeping an eye on Redfin and Rocket because both are on the move. Rocket had agreed to buy the real estate listing site at $1.75 billion. Redfin up 75%, 76% at the market open. Rocket, though, down more than 10%. It was down more than 12%. That was the worst day to start since April of last year. But we have an exclusive interview with the Rocket CEO in less than an hour. We'll see what all that's about.
Yeah, very much looking forward to that. I think residential real estate is fascinating, and they're looking at more and more homes being sold at or below their listing price, which is a real change. In terms of losers, DoorDash is now lower. It had been higher because it was added to the S&P 500 in the latest quarterly weighting change. Typically, that means fund managers will have to add it if they track those indexes, this one major benchmark index, and maybe they already did, by the rumor, sell the news. Speaking of sell-side strategists are starting to rethink some of their price targets for the index and saying you may want to sell for now and then buy later. That's exactly, or rather, what I've gathered from it, because tariffs and the threat of an economic slowdown are going to weigh on stocks. I think Mike Wilson is saying to the tune of about 200 points, and then drive us up 1,000 after that. Let's take a closer look with Bloomberg's Alex Semenova at the desk here at 731 Lex. Alex, great story, and there's a lot. Dubravka is also saying we could see a drop to 5,200 and then a rally back to 65.
Yeah, Matt, that would be another 10% drop, so pretty painful. And he really highlighted a wide range of outcomes for the index, 5,200 to his year-end target of 6,500, just highlighting the uncertainty this year has brought so far for sell-side strategists who going into it were pretty bullish. You couldn't find any bears on the street. The average year-ahead target stood around 6,500. That was about a 10% gain from where we closed last year. And now you're starting to see that optimism being reined in. You had RBC Capital Markets' Lori Calvasina, Evercore ISI's Julian Emanuel coming out and basically saying that the probability of their bear case materializing has just gotten higher. They are still sticking to those targets. And in fact, there was an analysis by Piper Sandler that found that the consensus target usually lags behind the actual market's moves by about 60 days. And if they were changing them at this point, it would just show no conviction at all in the target they came into the year with, but a lot less optimism than we saw in January.
And I think that's such an important point, and I love that stat from Piper Sandler that, like you said, of course, there's a 60-day lag that usually materializes. So this happens every year, to sum it up. But it does feel that this year, there's a wider band of outcomes here, that the uncertainty is much greater than usual, especially at this point in the year.
Yeah, we're seeing, wrong way calls happen a lot over the last 3 years, really, given the bifurcation that we've seen both in the S&P 500 with big tech just dominating all of the gains, and now that group taking the index lower, and then, of course, bifurcation in the economy with the U.S. consumer, and that has made it really hard to predict what U.S. equities are going to do. Last year, we kind of saw expectations for a flat index and obviously got a 20% gain, and it seemed like strategists just couldn't keep up with the rally. They kept upgrading their targets, and now we're seeing the opposite of that. Everyone has finally caught up. You went into the year with optimism, and now we have tariff concerns and growth concerns really weighing on those positive outlooks.
Well, it's great reporting by Bloomberg's Alex Semenova. Make sure to check her out on the Bloomberg terminal, tracking all the sell-side movements. And let's continue the conversation now with Kara Murphy. She is Chief Investment Officer over at Kestra Investment Management. Kara, it's great to have you with us because as we were just discussing, the sell side trying to recalibrate and keep up with this ever-evolving Trump administration and what their policy goals are. From where you sit, has your playbook changed at all from, relative to where we were at the start of 2025?
Well, the short answer to that is no. We came into this year talking about rising policy uncertainty being one of the biggest risks that the market faces. So, you had an administration who was elected to office on the basis of making really big change. Really big change creates uncertainty. And so I think that's what companies are really grappling with right now. Then you layer on top of it a relatively high level of valuations within the market, and that just makes the market vulnerable to the rising level of uncertainty. The good news is that the policy outlook can change fairly quickly. So we don't think that this is necessarily a long-term issue for the market, but there is some digestion that the market has to do, and we need to get back to this sort of area where we can have a good view about where policy is headed so that companies can then begin to plan.
It's interesting. For the past year, we have heard so much about a broadening trade. And if we look at some of those trades, we see correction territory. The Russell 2000 is off more than 15% of its heights. The KBW Bank Index also off more than 12%, headed toward 15% lower than it was at its height. The Philadelphia Semiconductor Index, very popular trade in the last couple of years, is off more than 20% from its heights. With all of these indexes in correction territory, some very deeply in correction territory, are you finding any buying opportunities outside of the classical indexes?
I would counter some of those indexes that have suffered with some of the areas of the market that have done fairly well. You're seeing EFA up fairly significantly this year in a very different environment than what we're seeing the S&P. You have things like staples that are outperforming so far this year. So in many ways, I think it's the diversified portfolio that's looking a lot like the hero so far this year, whereas it's really lagged over the last 2 years.
In terms of what you want to buy right now, Kara, is there a place you go, or do you stick with, the old favorites that have been hit so hard? Do you stick with the big hyperscalers, huge tech cap after, for example, NVIDIA lost $1 trillion in market cap? Or do you go to look at some of the broadening out trades?
I think you lean more into that broadening out. This has been a theme of ours again for a number of months. You mentioned small caps as like deeply into correction territory, and that's where we would be a little bit less aggressive. But if you go into the mid-cap territory, you have companies that, are having really sustainable earnings. Sometimes they're a little bit more protected from some of these tariff initiations. And so you can have some rising earnings momentum there. And then also if you look outside of tech, I mentioned staples, healthcare, some other sectors that we think could start to catch a bid as you start to see that earnings momentum return in the second half of the year.
Kara, where would you stay away from in this environment? It feels like there's a lot of losers to pick from for right now, but if you separate out the signal from the noise, where would you actually want to sustainably avoid right now?
So we would actually be underweight technology, partly because we're seeing weights in some of the core benchmarks in technology at among the highest levels that we've seen, certainly since 2000. So we think simply from a risk perspective, getting even more overweight technology is not doing a great job from an overall portfolio perspective. And again, I think we're going to see in the second half of the year some of those earnings begin to lose momentum. The amount that some of those technology earnings are growing relative to the rest of the market is going to narrow. And so that's one area that we would be a little bit more cautious.
I want to go back to something you were saying about the consumer staples here, because in an S&P 500 that is down on the year, you are seeing consumer staples already up more than 6%. Realistically, how much more room does the trade have to run? And in some ways, is it recession proof? I mean, people are acting like, well, okay, you have an area here insulated from the broader market malaise because you still need to buy toothpaste.
I think that's exactly why investors are starting to rotate there. And that's an area that's significantly underperformed over the last 2 years as people were more interested in sort of like this technological innovation, hyperscalers. But as you said, these are areas where people still have to buy toothpaste and laundry detergent. So much more sort of less cyclically driven than some of these other areas. And therefore, those profit margins are also a lot more defensible.
All right, Kara, great to have you on the show today. Thanks so much for joining us. Kara Murphy there of Kestra Investment Management, talking to us about where to invest in this market downturn. We are, again, seeing a big sell-off in the major indexes. The S&P 500 right now down about 1.5%. So you can see 1 1/3% there, off 76 points to less than 5,700. Coming up, tech leaders head to the White House today. More on what's on the agenda next, and what are they going to say about the huge loss in wealth? This is the NASDAQ, but as I said, NVIDIA has lost $1 trillion in market cap this year. This is Bloomberg.
So a number of people, I think from Homeland Security and or the CIA or NSA, have gone to Capitol Hill and said that TikTok is a danger to our national security. But the public hasn't been given that much detailed information about what the threat is. How much of a threat to our national security is TikTok?
The People's Republic of China acts adversely to the interests of the United States in different ways. One of those ways is through the dissemination of disinformation, the intentional communication of false statements, and TikTok is an extraordinary avenue through which to disseminate disinformation to millions and millions of people.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
All right, welcome back to Open Interest. A quick check on stocks about 14 minutes into the session. You can see we're still lower right now on the S&P 500, off by about 1.3, 1.2%. Big tech is your biggest loser right now, with the NASDAQ 100 off by about 1.7%. We know NVIDIA, Tesla down today, and that's certainly not helping. What is a little bit surprising is that you have the small caps outperforming, but still deeply negative right now on the Russell 2000, off by about 0.9%. Meanwhile, it's time now for our top calls. Some of the analyst action in focus this morning. And first up, Airbnb getting upgraded to a buy over at Jefferies thanks to durable growth and new products. That's good for a 0.4% rise right now. Next up, Cracker Barrel getting upgraded to a buy over at Truist. The firm says that solid results in the last 2 quarters is a sign that the turnaround plan is working. And finally, we have DocuSign, no longer a sell over at JP Morgan. The firm says the e-signature company has potential to reverse some of its recent underperformance. You can see shares, though.
All right, so DocuSign off a little bit there as it's no longer a buy. President Trump is set to meet with tech leaders this afternoon. The CEOs of HP, Intel, IBM, and Qualcomm will all be at the White House to discuss trade policy and U.S. manufacturing. Joining us now is Bloomberg Tech co-host Caroline Hyde. So I guess they're going to all say, we're bringing jobs back to America. Please give us a carve-out on tariffs. Is that how it works?
Well, we'll see if TSMC and it worked for them. But of course, they brought $100 billion investment plans, and many would say that's potentially try and circumnavigate the tariff threat that's currently going on. But these are manufacturing giants in the United States, companies that have been weighed lower by a fear about the exposure to China. Remember, Qualcomm sells a lot of chips into China. They're also getting a lot of produce from China. Is that going to be driving up their products costs overall? They've got a lot to be discussing with President Trump. It's behind closed doors at about 2 p.m., but we'll see if we get a readout or a playback as to ultimately what they're asking of him at this time, because it is weighing down every single tech stock at the moment, and these companies are key among them.
Right, it's incredible. If you look at the Magnificent Seven, only Meta is up on the year and only by 4%. So even there, you've seen the gain really shrink. In short, what do they want? At the end of the day, if you had to go with your wish list and ask for one thing from the President of the United States, what is it?
Probably consistency. I would have thought every CEO needs that at the moment. Where do they stand on the CHIPS Act? We asked that of David Sachs, the AI and crypto czar, on Friday. Are they going to do a repeal of the CHIPS Act? He doesn't think that's exactly what President Trump is hinting at here. But we know that both sides of the aisle are worried about a pullback in money promised to these giants to bring U.S. manufacturing here into the United States. They've had a lot of money, about $400 billion worth of commitment in projects, some of them coming from overseas giants like TSMC, but some of them, of course, benefiting the likes of Intel. And in fact, David Sachs was on the show on Friday saying, look, we don't like the CHIPS Act because in many ways it keeps giving money to underperforming companies, hint, hint, Intel. But they want to start to see U.S. manufacturing here, and in some ways spearheaded by U.S. companies, not always foreign ones.
Well, to that point, let's talk about Oracle. Oracle reporting after the bell. I'm excited for that. I'm excited, of course, about the data centers that went live in February. But what I'm really interested to hear is any comments that we might get on the earnings call about that Project Stargate joint venture. We haven't talked about that in a bit.
Yeah, where the money's coming from.
Yeah.
Again, another $100 billion commitment, this time coming from Oracle as well of OpenAI and, of course, SoftBank. But how much money is coming from Larry Ellison? How much is he managing to see data center wins because of the amount they're going to be supplying OpenAI, which previously had all been about Microsoft data centers, but now they move to Oracle and other providers? How much is it going to cost them to build out what's happening over in Texas? But they're also going to be looking for data center focus in other states. What's going to make them willing to put money there? And ultimately, how is it going to affect their margins? Once again, we're expecting about 8% growth in sales. That's good for Oracle. We're likely to see an increase of about double-digit revenue growth for the next few years, according to analysts, because suddenly cloud infrastructure is back for this player.
I got to ask you, Caroline, about TikTok. Because you're the only person I follow on TikTok.
Oh, thanks.
President Trump said he is negotiating with 4 bidders.
He
the President of the United States is negotiating with a Chinese company to sell. I mean,
well,
does it
there's
make
not much
sense?
else going on. You know?
Okay,
No,
so he has 4 bidders for TikTok. What are we thinking? Like a $50 billion?
That was the haphazarded amount that we thought. Look, ByteDance, we understand, has got a market capitalization of about $400 billion. US TikTok, which is just a part of TikTok, which is a part of ByteDance, is about $50 billion is what some market analysts and commentary had been made. Who is in the running here? That is the sort of game that we keep on playing. We know that Frank McCourt Jr. and Alexis Ohanian is one of the bids that are out there. They want to totally change the game in terms of how TikTok functions. They want it to be decentralized. They don't want those algorithms, thank you very much, and that's why China has been reticent to sell it, of course. China itself had thought Elon Musk might be a nice buyer, but Elon Musk himself has said he's not interested.
Right.
You've got, of course, Jesse Tinsley, who's alongside potentially Mr. Beast. Mr. Beast seems to be interested in whoever's got a good game out there and a good offer. He's willing to be alongside
I have yet
them.
to understand who that is.
Yeah.
Well, you should follow him on YouTube and TikTok. Is a pretty good start.
Really quickly, Caroline, I had a really traumatic day in January when TikTok shut down for a couple hours. Is there any risk of that happening again, or could this deadline get pushed again? How does this work?
April 5th, almost upon us, and on Air Force One, President Trump did say to reporters, yeah, maybe I could push it back once more, but he thinks that there are deals that are close and 4 potential bidders. As yet, we've only really heard of 2 clear ones, but remember, names like Microsoft, Amazon have been bandied about as to whether they'd purchase this. Oh, and Perplexity AI, who said that they might want to buy the company.
Don't
Many
forget,
wonder why.
Donald Trump himself suggested that Larry Ellison maybe buy it when they were all hanging out at the White House.
And at the end of the day, we got to see where that money comes from with this instance and a lot of other things like Stargate coming up. Bloomberg Technologies' Caroline Hyde, looking forward to the show starting at 11 o'clock. Lot to talk about. But coming up, a $900 million loss at hedge fund giant Millennium. We're going to give you details on that scoop next in the Wall Street Beat. This is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern, only on Bloomberg. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
And it's time now for the Wall Street Beat. Millennium is said to have lost about $900 million so far this year from two teams focused on index rebalancing, a strategy that's been recently upended by global stock market volatility. Bloomberg hedge fund reporter Nishant Kumar has more on the scoop. And Nish, you know, this usually reliable strategy goes like this. You buy stocks that are entering major indexes, you sell stocks that are exiting them. And this has become wildly popular. So does Millennium's pain signal much more trouble for others, given how popular the strategy has become?
Well, educated guess, yes, though I can't confirm any names yet. Look, last time when it happened, when this trade really imploded, was in 2022. And the pain was across hedge funds, and multiple teams and portfolio managers left as a result. You know, Exodus Point then dialed back nearly all its risk-taking in index rebalancing. But likes of Point 72, Millennium, Balias, Citadel, you name it. And many of the hedge funds saw their portfolio managers specializing in this trade leave then. So we cannot rule out that this trade is not affecting others. For sure they are.
There's been a lot more volatility in these markets. Katie recently explained to me what risk parity is, so I feel like I know a little bit more about hedge fund strategies. Don't these kind of investors, they're the masters of the universe, right? The smartest people in the room typically make more money in volatile times, or do they make more money in times of stability?
Yeah, I mean, there are strategies that make more money in volatile times, but this is not one of them. It's a very leveraged, large bet, and when you have a sell-off like this, you know, these traders are bound to, some traders are bound to cut out. Like Glenn Schonberg is one of the biggest names. He's the index rebalancing king of the hedge fund world. This strategy is a big portion of Millennium's risk-taking. And Glenn has made, you know, billions of dollars over the years for Millennium. 900 million between two parts is large, and but going back to his track record, like he has made many times more than this. So, I mean, we can question the commoditization of this strategy, but then traders like him and others always find different ways to tweak this strategy, keep on improving, to avoid that alpha decay that we are seeing in the more commoditized form of index rebalancing.
Nish, we got to leave it there. We thank you so very much for your time. Excellent reporting. Looking forward to more this week. Bloomberg's Nishant Kumar. And I've got to say, guys, if you think about the pain from the buy side, it's everything from trend followers burned more than the S&P 500.
Right.
It is macro funds. It is long-only funds. One after another, you're seeing red on the screen, and even more today.
Well, let's talk a little bit about that red on the screen, because the S&P 500 now down about 7.6% from its high. Of course, 10% is the threshold that we're watching. Then we're officially in correction territory. Take a look at the even split right now in the S&P 500. You have about 243 stocks in the green, just a little bit more than that in the red right now.
And the NASDAQ dropped more than 2%. We're going to continue to focus in on these markets with State Sea strategist Lee Farage when we come back. This is Bloomberg.
Offers before to take over Greyhound, but then in the midst of the pandemic 2.5 years ago, we had this fantastic opportunity to buy the brand and the network. When we took on Greyhound onto the Flix tech platform for network management, revenue management, we saw the highest unit economics in more than 100 years of Greyhound history.
My vision is to transform long-distance bus travel in the United States and make it one of the top considerations for anyone planning a long-haul journey.
CEO Kai Boyson imagines even more potential if state and local governments recognize the need to support long-distance bus travel with integrated infrastructure.
We need to think about the infrastructure in the United States holistically and think about the transportation system as one integrated system. And intercity bus needs to be an integral part of that system. One should be able to connect from one mode of transport to another seamlessly, easily. We have great success models in the United States. For example, Los Angeles Union Station, Boston South Station, or New York Port Authority Bus Terminal, or Washington, D.C. Union Stations.
Kai and the team, they are doing a fantastic job. They have really improved the product, they have improved technology, they have really made the production more efficient, that at the moment it's also a profitably growing business.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you the latest in tech and AI news whenever and wherever it happens. I'm Tom McKenzie in Paris, and this is Bloomberg.
News on the Hour, sponsored by Progressive Insurance.
I'm Christopher Cruz on Wall Street. About 30 minutes into the trading day, stocks are dropping following last week's decline, the sharpest in 6 months. The CEO of Crossmark Global Investments, Bob Dahl, says there's a lot happening that the market doesn't like.
Markets hate uncertainty.
And the uncertainties around the economic trajectory, tariffs, tax cuts, the job market.
China placed retaliatory tariff today on many American agricultural products. The list from CBS News business analyst Jill Schlesinger.
The Chinese will slap a 15% tariff on chicken, wheat, corn, and cotton from the U.S., and a 10% tariff on sorghum, soybeans, pork, beef, aquatic products, fruits, vegetables, and dairy products.
House Republicans have a plan to keep the government funded beyond midnight Friday, averting a shutdown. CBS's Caitlin Huey-Burns.
Over the weekend, House Republicans released a stopgap plan to kind of keep things running through the end of September 30th. It increases defense spending by about $6 billion while decreasing domestic spending by about $13 billion.
Few, if any, Democrats are expected to support the plan. It's not clear how, but 5 people on board a single-engine plane survived when it crashed and burst into flames in the parking lot of a retirement community in Lancaster, Pennsylvania.
The plane had just taken off from a nearby airport, and the pilot told air traffic controllers he needed to make an emergency landing.
Lancaster Tower, Bonanza 347 Mike has an open door. We need to return for a landing.
The pilot headed toward a runway, but did not make it.
Rescue 1, Lancaster Tower. The aircraft is down out just behind the terminal on the parking lot street area.
No one on the ground was hurt. Jim Crisilla, CBS News.
An oil tanker and a cargo ship have collided in the North Sea off the coast of Britain. Some crew members are unaccounted for. The BBC's Phil McCann.
The BBC's spoken to 2 separate sources who both confirmed that there was a fire or fires on board, and hence those vessels with firefighting capability having been called. The incident remains ongoing.
32 people have been brought ashore. Their condition is not known. North Korea has conducted more ballistic missile tests. Alex Jensen reports from Seoul.
North Korea had warned the Allies not to go ahead with their Freedom Shield exercise, and now appears to have responded with its first ballistic missile test since President Donald Trump took office in January.
Stocks opened sharply lower this morning. The Dow at this hour is off almost 1%. The S&P 500 is off almost 2%. NASDAQ off almost 3%. This is CBS News. Allergy season is almost 2 months longer than it was half a century ago.
A Climate Central analysis finds the growing season is now more than 50 days longer than it was in the 1970s, and that may mean a longer and more miserable allergy season.
Try to keep the windows closed so pollens from outdoors aren't coming in. Very frequently you want to open it at nighttime. The problem is you will wake up with lots of symptoms.
Cleveland Clinic allergist Sandra Hong recommends a nasal spray for congestion and sinus pressure, while an oral antihistamine relieves a runny nose. Stephen Kaufman, CBS News.
Russia today accused 2 British diplomats of spying and said it will kick them out of the country. Russian officials didn't provide any evidence, but said the 2 engaged in intelligence and subversive activities that threatened Russia's security. In September, Russia accused 6 other British diplomats of spying and said it would expel them as well. Christopher Cruz, CBS News.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Good Monday morning from the Bloomberg Interactive Broker Studio in New York City. To our worldwide audience, we're also streaming live on YouTube, so head over to youtube.com and search Bloomberg Podcast Live. Alex Steele, she is down in Houston, Texas at Sarah Week. We're going to be hearing from Alex in just a moment. She previews a number of interviews she's going to be having over the next couple of days. We'll hear from Alex directly. Isabel Lee sitting in for Alex for the next couple of days. We appreciate that. Isabel Lee from Bloomberg News. Coming up, we're going to chat with Tyler Kendall, Bloomberg News reporter. Get the latest coming out of Washington, D.C. with all this Trump tariff news. Margie Patel, Allspring Global Investor. She's a senior portfolio manager there. We'll get her market call. Brian Platt, Bloomberg Canadian government reporter. We got a new prime minister up in Canada. Some tough talk as it relates to the U.S. as we engage in this trade war with our northern neighbor. And Sam Fazeli, Bloomberg Intelligence, a senior pharma analyst over in London, to get the latest call on global healthcare. So a lot coming up in the next hour and two. So we're going to start it all off with Mr. John Tucker and a Bloomberg Business Flash. John.
Okay, and let's start off with the NASDAQ 100 right now. It is down 11.2%, and that is a correction. After Friday, it also entered correction, you'll recall, but did rebound. And investors rushing to the safety of U.S. Treasuries, that is pushing yields lower right now. We have the 10-year down just about 8 basis points. We're at 422. NVIDIA and Tesla among the stocks leading losses among the Magnificent Seven. You have shares of NVIDIA right now down 3.2%. Tesla shares, they're down 7 3/4. And economist Dennis Gartman does see a contraction in the U.S. economy.
I think that the economy, no question, is going into recession. The leading economic indicators have been down for, 18 of the last 19 months. We had 1 month where it turned higher. The only thing that keeps me from being extremely bearish of the stock market is that the CNN Fear and Greed Index is at extremely low levels, overextended to the downside.
Rocket Companies agreeing to buy Redfin in an all-stock transaction that values the real estate listing site at $1.75 billion. Redfin right now up 76%.
Wow.
DoorDash being added to the S&P 500 along with Williams-Sonoma, TKO Group, and Expand Energy. Let me do DoorDash right now. That's actually down 1%. Overall, the S&P 500, 105 points lower. This is down 1.8%. We are at 5666 on the index. The Dow Jones Industrial Average down 395 points. And it is the NASDAQ 100 that is leading the declines right now in the major indexes. It is down 2.6%. This is a 524-point wipeout. And as the biggest energy conference of the year gets underway, let me do a crude oil quote for you. Brent right now is at $69.99, down 33 cents. American crude, NYMEX crude, down 29 cents a barrel. That is at 66.75. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash, being brought to you by Commonwealth. Join over 2,000 independent financial advisors who are taking control of their growth with advisor-centric support and future-ready technologies. Grow on your own terms with a partner dedicated to your success. Go to commonwealth.com to learn how. Paul and Isabel, hello.
All right, John Tucker, thank you so much. We appreciate that. Isabel Lee sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Market Drivers today is brought to you by Interactive Brokers. Trade over 10,000 U.S. stocks and ETFs, U.S. equity index options, U.S. treasuries, and more on your timetable. Learn more at ibkr.com/around-the-clock. Isabel, thanks so much for sitting in for Alex. She's down there in
Houston doing that oil and gas thing, I think.
No, I'm excited to be here. It's such a busy day. And over the weekend, that's when it began, really.
Yeah, and it's just a tremendous sell-off here today, as John Tucker was reporting. S&P off 1.8%, the NASDAQ off 2.8%. Let's go down to Houston, Texas. Alex Steele, our own Alex Steele, is down there in CERAWeek in Houston. Alex, tell us what CERAWeek is and how big it is for the global oil and gas business.
Honestly, it's huge. Everybody who's anybody is here, whether you're in the utility, power business, whether you are a minister in OPEC+, whether you are one of the big energy companies here in the U.S., everyone comes together and they talk about the main issues. They try and make deals. They talk to shareholders. It's a really big deal. And even more so this year, because not only have you had that slide in the oil prices, equities have sold off, but you have questions about what energy policy is under President Donald Trump. It said it's going to be drill, baby, drill, baby, drill, baby, drill. Is that actually happening? And what would it take to make that happen? So we're going to have those conversations. We're going to talk about tariff risk, because tariff risk affects every single company here. And if we go into recession, that will also affect every single company here. So we're going to break all of that down for you. In the next hour, I'm talking to Lorenzo Simonelli. He is the CEO of Baker Hughes, an oil services company, sitting right in the center of oil drilling as well as natural gas export build out. And we have tons of guests throughout the day. The Secretary of the Interior will be here. Also, the Secretary of Energy will be here. What is the future of offshore wind in the United States? Is it toast? Also, if the tariffs really prohibit drill, baby, drill, does that change the calculus then for the administration that's relying on 3 million barrels of oil a day growth in the U.S.?
All right, Alex, that'd be great. We'll be hearing from you this morning, today, and tomorrow, CERAWeek. Again, it's big in the oil and gas business. And again, I've watched season 1 of Landman. I consider myself now an expert on all things oil and gas, so I'm looking forward to some of those conversations. Alex, thank you so much. Alex Steele down there in Houston. CERAWeek is important. I'm looking at WTI crude oil, $66.70 here, off a little bit here, but certainly a sell-off. Filled up the tank at $2.80 a gallon here this weekend down at the Jersey Shore. Let's get an update here on what's happening down in Washington, D.C. with all these tariffs. Every single day there seems to be more and more news. Tyler Kendall joins us, Bloomberg News reporter. Tyler, what's the latest on the tariffs here? We heard some tough talk from Mr. Carney, the incoming Prime Minister of Canada. What's the latest?
Right. Well, we are expecting the next round of tariffs to go into effect this Wednesday. That's going to be on steel and aluminum tariffs at 25%. We've been told not to expect any exemptions or carve-outs at this moment. But of course, like many things, that remains to be seen and could be a moving target here at the White House. And I would just expect to hear this week rhetoric start to shift from senior administration officials. We've often talked about tariffs up to this point as being a way to advance President Trump's border policies. But now we're going to start to hear a lot more about these tariffs being about national security concerns. You'll recall steel was a flashpoint on the 2024 campaign trail with that proposed Nippon Steel acquisition, and where we heard national security come up. Notably, Commerce Secretary Howard Lutnick over the weekend did say that Americans should start to prepare for foreign good prices to go up, although he contends that U.S. good prices will ultimately go down over the long term, but that there might be that adjustment period, as we've heard President Trump talk about. I just bring that up about the steel tariffs because we have to keep in mind that includes those downstream items, and economists say that could hit consumers the most.
Tyler, Trump said that the U.S. economy faces a period of transition. How much pain are they willing to take?
Right. Well, the threshold for pain appears to be a little bit higher than most people believe. But the rhetoric right now out of the White House is that there needs to be this short-term adjustment period in order to have this longer-term growth. And President Trump actually gave us a little bit of insight into his thinking during that interview that aired over the weekend, actually comparing the U.S. to China, saying in his words that China thinks in a 100-year perspective, whereas the U.S. likes to think in quarters. He then used that as a way to segue into doubling down on the claim that he says he is not watching the stock market, though he did noted that he has his eye towards interest rates. But it really does track with what we've been hearing from White House officials, which is that they are trying to have everybody look at the broader macroeconomic picture when concerns come up about inflation or the labor market and workforce cuts or even consumer sentiment. And I actually caught up with NEC Director Kevin Hassett here on the White House North Lawn earlier this morning, and he told me that there's really not much they can do until the full Trump agenda is implemented, which really means that they are banking on some things that haven't yet quite gone into effect, such as tariffs as a revenue raiser, which goes hand in hand with, importantly here, President Trump's tax cut agenda, which, Isabel, we know is not going to necessarily be an easy task for this Congress.
And Tyler, I guess that the initial discussion surrounding these tariffs from President Trump's administration, where they were really not so much a trade war issue, but a war against drugs and immigration, is that still the argument that the administration is making?
Well, when it comes to those tariffs against Mexico and Canada that currently have this USMCA as well as auto exemption on them, this administration, even over the weekend, said that any amount of fentanyl coming over the border is too much, and it doesn't really seem like they're moving off of that. We're going to then move into this national security argument with the steel and aluminum tariffs this week, but then we are really pushing ahead to that April 2nd date that the administration keeps pushing us towards when it comes to the reciprocal tariff plans. We did learn that after President Trump had threatened reciprocal tariffs against Canadian lumber and dairy, for example, that likely will not take effect until April 2nd, even though he had threatened that those numbers could have come sooner. So we're really going to start to see this argument of reciprocity as we start to expect some more leaders to come here over the next couple of weeks as we beat the drum up to that April 2nd date.
How aligned is President Trump and Secretary Scott Bessent? We have Trump saying that this is a transition period, and we have Bessent saying this is a detox period.
Right. Well, they're really trying to put forward this picture that the government does need to reduce government spending, and that does go along with this tax cut agenda. We're going to need spending cuts in order to offset the tax cuts, and that's something that this Congress in particular is going to have to grapple with. Republicans in the House are really divided among this issue, particularly when it does come to government spending cuts and concerns about what it could mean for social programs such as Medicaid. That is going to be a very complicated factor here as they try to get that over the finish line, and we got one indication this weekend that they are expecting this to be a months-long fight. The House Republicans introducing a stopgap measure to keep the government funded until September 30th, with President Trump posting on Truth Social that he had asked for that date in order to give enough time for Republicans to work out the rest of his agenda items.
All right, Tyler, thank you so much for joining us. Really appreciate it. Tyler Kendall, she's a reporter for Bloomberg News down in Washington, D.C., giving us the latest on some of this fluid situation as it relates to the tariffs, which ones are going on, when are they going on, which ones are coming back, what products and sectors may be exempt, so it requires constant reporting. One thing is for certain, it creates a level of uncertainty out there when we're seeing that in the financial markets. Just here today, the S&P 500 trading off pretty big here, 1.7%, Isabel.
It's really incredible, the volatility you're seeing, and it's across asset classes. And when Trump said that this is a period of transition, we have market forecasters also piling in. We have banks like JP Morgan and RBC tempering their bullish calls. Now they're wondering whether their S&P price targets, this uber bullish ones at the start of the year, will be hit by the end of 2025.
Yep, what a change here. We've got the VIX elevated here up 3 points, 26.55. The VIX showing you the volatility expectations for the equity investors. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with his Bloomberg Business Flash, being brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure for new U.S. customers with minimum financial commitment. The offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. Well, the NASDAQ 100, that's where all the action is right now, down over 11% from its February peak. So that does fit the definition of a correction for the tech-heavy index. The Mag 7 stocks, they're leading the declines right now. Let's go right through them. Apple down 4.3%. You have NVIDIA, that is down 3.9%. Tesla, those shares down 8.7%. Amazon down 3.2%. Microsoft 2% lower. Meta Platforms, you get the idea, that's down 4%. Alphabet right now down 4.3%. They are the big laggards in the index right now in terms of index points. As for overall, the S&P 500, 106 points lower. That's down 1.9%. The NASDAQ 100, that is a 556-point drop, down 2 3/4. Right now, the Dow Jones Industrial Average down 345 points. Where's that money going? Part of it is going into the safety of treasuries, the perceived safety of treasuries. The 10-year, the benchmark, that's down 8 basis points as the price rises. It is the yield right now 4.22%. The 2-year yield, that is 8 basis points lower. Right now, 3.91%. I just want to pass this headline along to you. Harvard says it's temporarily freezing hiring of staff and faculty. Presumably, this has something to do with the kind of a freeze in some of the federal funding.
Yeah,
to,
so the Columbia
schools
news last week, right? Yep.
Yeah, exactly. So add another one there. Anyway, we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Isabel and Paul.
All right, John Tucker, thank you so much. We appreciate that. Isabel Lee sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio in New York City. We're also streaming live on YouTube, so head over to youtube.com, search Bloomberg Podcast Live, and that's where you'll find us. Sell-off in the marketplace, as John's been reporting here, off 11%. The NASDAQ is from its just recent high, so a lot of angst out there in the marketplaces. The market tries to digest a lot of this new economic policy coming from the Trump administration. Margie Patel, she's approached. She's seen it all before. She's a senior portfolio manager, Allspring Global Investments up there in Boston. Margie, what do you make of kind of what we're seeing in these markets over the past few weeks here? How do you put this into context for your clients?
Well, I think that it's one thing overriding is that I think nowadays the market is dominated by, frankly, short-term trading. And I think over statistics I've seen say over half the trading volume is really short-term oriented accounts, hedge funds, private equity, and so forth, rather than long-term investors who maybe have more knowledge than the average person. So I think you could say in retrospect, in the fall last year, the tech sector was too high for growth. And now you might say it's either fair value or actually even rather attractive. And the fundamentals of the companies haven't changed, but just the prices changed quite a bit. So what we're seeing is I think you've seen first they knocked down the, vulnerable stocks that might be hurt by various proposals by Trump. And then they're really coming through and sort of whacking down everything that's basically outperformed. So I think that says we're near the end of this correction. It's a liquidity period of the market where, because of tax payments and so forth, there's often tightened liquidity. And this is often at a low period in the market. So I think we're just about bottoming out over the next, say 1 month, 2 months. And then I think the market will have modest total returns for the year, which look ambitious from here, but that's what I think we'll see because the fundamentals are still pretty good for companies.
What is the biggest risk to the market right now? What is concerning your clients the most, Margie?
Well, I think, frankly, most individuals are really frightened by these short-term swings in prices and sectors like the Mag 7 that appear as if they'd go up forever and outperform the market, having a big step down, I think shakes a lot of people's confidence in the marketplace. But when you look at the growth of the economy, which I think the odds of a recession are pretty small. We may get one negative quarter, as we did a couple of years ago, and then the economy kept on going. And the Fed clearly is going to be supportive of the economy. If they need to cut rates, if they think that'll help, they'll do that. So I think I'd hate to say fear is the biggest thing that people need to fear, because the fundamentals still look for a modestly growing economy.
So I guess the fundamental foundation of that, Margie, as you just mentioned, is a fundamentally strong economy. But there are concerns that a lot of this uncertainty in the marketplace, as well as the actual impact of tariffs, may be, causing a material slowdown in the economy in 2025, perhaps even a recession on the far edge. What is your view of kind of how this economy will perform in 2025?
Well, I think it's really not a clear picture exactly what the tariffs are going to do. First of all, we don't know how much of economy they'll affect. We don't really know the impact as we go on through these tariffs, how long the tariffs will last, and whether they necessarily will be very, very negative for the U.S. economy. I think that they won't be as negative as many people are thinking. So we have a lot of known unknowns, but when you look at the knowns that we know for sure, you look at an economy that's well balanced, that still has better growth than just about any other country in the world. So I think it's just a cloud, and we really don't know. The textbooks tell us tariffs are bad, but I think real life experience from many people says maybe tariffs would help the U.S. economy vis-a-vis other countries that we've basically given away a lot of our industrial growth to.
So under this cloud, where do you hedge?
I think that it's just number one is not do any short-term trading with regard to the market when you see these breathtaking, mostly down moves. But we've also had some up days, because when the market finally hits bottom, if you're trying to time the market, you'll miss the first 20% of the upside. So if you're not on leverage, if you're not in stocks with borrowed money, I think it's better to just sit tight, because a lot of these moves aren't so much fundamental judgments on the stock, but more technical short-term trading reactions, and looking at short-term things that are overbought or oversold rather than fundamentals of the company, because it looks like corporate profits will be more modest this year, but still positive. So if they're up 8%, we could have a stock market up 6, 8, 10, 12%, which would still be pretty attractive compared to money market rates. So we think the stock market's still attractive. You're getting paid to ride out the short-term volatility.
All right, Margie, thank you so much. We appreciate it. As always, getting a few minutes of your time, Margie Patel, Senior Portfolio Manager, Allspring Global Investments, based up there in Boston, Massachusetts. Mark Carney has won the race to become Canada's next Prime Minister, taking over for Justin Trudeau amidst economic uncertainty due to U.S. President Donald Trump's trade policies. To get the latest, we turn to Brian Platt, a government reporter for Bloomberg News. He's up there in our Bloomberg Interactive Brokers studio up there in Toronto. Brian, thanks so much for joining us here. What's the latest with Mr. Carney? What are the most immediate steps for him in office?
Well, so what happened last night was Mark Carney won a leadership race that the Liberal Party held. So it was an internal contest voted on by party members. Carney had competition in the race, and he absolutely crushed the competition. He won with 86% of the vote, which is, I mean, much higher than I would have expected. So Carney has become the leader of the party, and that means he will step into the Prime Minister's office. I would expect that transition happens later this week. And then things get really interesting, because most likely you have a national election call shortly afterwards. And so I think, Mark Carney's won his first test here, which is to become the next leader of the Liberal Party and the next Prime Minister. But most likely we have a national election campaign coming up, and it will be entirely defined by Canada's response to Donald Trump.
So Carney portrayed himself as an experienced crisis manager who led central banks at various pivotal moments, but he's still untested as a politician. What are we expecting?
Yeah, I mean, it's pretty interesting. He's going to step straight into the Prime Minister's office, having never actually been elected in any kind of general election before. He's only won this internal party leadership race. So it's a huge test for Mark Carney now to see whether he can actually be a good politician. He's been the governor of the Bank of Canada, the governor of the Bank of England, and he's held a lot of, in the last few years, corporate board jobs, including the board of Bloomberg and Brookfield Asset Management, and some of these, a few other roles as well. So if this we'll now see if this can translate into actually being a good politician. But he, as you mentioned, led the Bank of Canada through the global financial crisis in 2008. He led the Bank of England through Brexit from 2016 to 2020 in that period. So his claim to fame is he knows how to manage these geopolitical crises, and now you've got one with Donald Trump, launching a trade war against Canada, and so that's the pitch he'll make to voters.
Brian, you're based in Ottawa, Canada. Give us a sense of how the person on the street is feeling towards the U.S. these days, given these tariffs, given the rhetoric about being the 51st state. Give us a sense of the person on the street.
Honestly, Canadians are extremely angry about this, and I really think that whenever I'm talking to Americans, I try to impress this upon them. Donald Trump has infuriated the country with how he's treated Canada. With especially, I mean, the tariffs alone would make Canadians angry, but he has talked in increasingly menacing ways about trying to annex Canada, about using economic force. Justin Trudeau the Prime Minister of Canada said last week he thinks Donald Trump is trying to cause a total collapse of the Canadian economy in order to try to take it over. There's no precedent for a Canadian Prime Minister talking this way about the U.S. And it has totally changed the political environment here. The Liberal Party was dead in the water last year. Right up until about January, Justin Trudeau's party looked like it was going to be crushed in the next election, and that has completely changed. The Liberal Party is now running neck and neck with the Conservative Party here, and it's entirely, I think, a response to Donald Trump and the sort of nationalistic attitude that is taking over in Canada to say we need to do whatever it takes to fight off this threat from the U.S. president.
It seems like he's keeping firm because he did pledge to keep the government's retaliatory tariffs on the U.S. goods until, quote, Americans show us respect. How do you think his relationship with Donald Trump will be?
I think it's a very interesting question, and it's something to watch for sure, because the relationship, I actually, throughout Donald Trump's first term as president, Trudeau and Trump on a personal level got along fine from everything I heard. Trump actually, they had a good personal rapport. Whatever existed in that first term is gone. Trump and Trudeau really don't like each other at this point, and the personality clash has really come out strong. Can Mark Carney reset that? Can he, have any kind of more constructive relationship with Donald Trump? I think is something to watch for sure. But the public opinion here is, do not back down. Do not take the counter tariffs off until all U.S. tariffs are off on Canada. I think in terms of like an economic response, you are not going to see Mark Carney back down in any respect until Donald Trump takes the tariff threat off of Canada.
Brian, thanks so much for your reporting. Appreciate it, as always. Brian Platt, he's a government reporter for Bloomberg News. He's based in Ottawa, Canada, giving us the latest on this trade war. I guess that's the only term you can use between the U.S. and Canada, which remains a fluid situation. The market's definitely selling off here today. We got the S&P 500 off about 2% here. The NASDAQ off about 3.1%, so a significant sell-off here. Bonds rallying. The 10-year Treasury yield is now down to 4.21%. A little more coming up. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash, being brought to you by IBKR. Financial advisors switch to Interactive Brokers for lowest cost global trading and turnkey custody solutions. No ticket charges, no conflicts of your interest at ibkr.com/RIA. Let's start off with the S&P 500 extending its slide from a record to nearly 8% after erasing all of its gains since Donald Trump was elected president. Treasury yields, they are dropping almost 30 basis points just in the past month over fears of an economic slowdown. And you're seeing that today in the flight to safety. 2-year yields up close to 9 basis points, down close to 9 basis points, right now at 391. The 10-year, 8 basis points lower. That is at 421. And the tech-heavy NASDAQ 100, that's where the real pain is, down over 11% from its peak. That's a correction. Speculation intensifying that Donald Trump is willing to tolerate hardship in the economy. As Steve Chaperone at Federated Global says, some sort of economic contraction is on the way.
When we talk about recession, you mentioned the word recession. I think we're going to have one, but I don't think it's a United States recession. I think it's a Washington, D.C. recession. I think that's primarily what's being orchestrated. And the question is, can Washington have a recession and the rest of the country doesn't?
Well, Novo Nordisk shares, they're dropping the most since December. The company's next generation shot failed to meet expectations in a trial. Patients lost only 13.7% of their weight over 68 weeks. Only 13.7. But I wouldn't give for that. Investors wanted to see even better results. Let's just do the indexes one more time. S&P 500 down 115 points, down 2% at 5653. The Dow is down 447 points. The NASDAQ 100, 594 points lower. That is down close to 3% in today's trading. Now we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Isabel and Paul.
All right, John Tucker, thank you so much. We appreciate that. Isabel Lee, she's sitting in for Alex Steele today. I'm Paul Sweeney. We're live in our Bloomberg Interactive Broker Studio here in New York City. We're streaming live on YouTube, so you can head over to youtube.com, search Bloomberg Podcast Live, and that's where you'll find us. As John was just reporting, Novo Nordisk falls the most since December after its new generation shot struggles in diabetes trial. Let's check in with Sam Fazeli on all things healthcare. He is the Director of Research for Global Industries, and he's also a Senior Pharmaceuticals Analyst based in London for Bloomberg Intelligence. So, Sam, talk to us about Novo Nordisk. Where are they in this incredibly fast-growing market for weight loss treatments?
Fast-growing, Paul, fast-changing. It's all over the place, right? These share prices. And I have to say, I don't think John Tucker needs to lose 13% of his weight.
Oh, my new favorite guest.
15.7% is what they lost in the 68-week trial. And then when you correct that for the placebo, so obviously you tell people to also diet, etc., that falls down to 12.6%. It's not a big number. Therefore, people are upset. And this was supposed to be the drug that is going to beat, they hoped would beat potentially, or be their main way of competing with tirzepatide or Mounjaro from Eli Lilly. The reality is, it's actually in this trial, it seems about in line with what tirzepatide gave us. So it's not that it's that bad. It's just these guys set themselves up a while ago saying 25% in obese, 20% or so in obese diabetics. Diabetics, for some reason, respond less. And of course, both of those have been lower. We had that one, the first one in the obesity population before Christmas, if you remember, and this one today. So, but is the share price down 10% or nearly 10%? Yeah, 9.7%. Is that fair? Who is to tell? This market is so awful with a sea of red everywhere that it's really difficult to parse out specific company thing or people are just miffed and they're selling.
That's really interesting because it's sea of red indeed. But taking a step back, when it comes to the reintroduction of legislation to modify the Inflation Reduction Act, how does large pharma sit amidst all of those?
Oh, just a small question then, right? No, I mean, look, at the end of the day, a lot of these folks are being told, you're going to have within that context, we've done a lot of analysis on this. Every year, 15 drugs are chosen to be negotiated for price by the Medicare plans. So, and it's possible that Novo's Wegovy is going to be part of one of those for 2026 or 2027. I can't remember exactly. That's what's happening with these guys. But a lot of pharma companies have said, look, we can manage this. It's within our realms to be able to cope. And so I think the market has generally accepted that the IRA isn't that bad for the pharma industry.
Sam, talk to us about kind of these generic weight loss drugs. And I guess I don't know if they're generic or if they're a different term, but
compounded is the phrase you're looking for. Yeah.
How effective are they, and how safe are they?
Well, I mean, look, the companies buy active from somebody, and they make it in the pharmacy, and they sell it to you, right? So it's usually a needle and a syringe, right? A needle and syringe and a vial. How safe are they? Who knows? No one's done trials on them. I think the FDA has to believe, and they do go through rigorous assessment, that the active that they're buying isn't going to kill people. And I don't think that there's been that much issue. But then at the end of the day, it's not the branded drug. It's not the drug that the manufacturers live and die by if there's an issue. So the reality is they should be out of the way anyway, because they can only sell what are essentially on-patent drugs, which they're not supposed to, right? If there's a shortage. And the FDA has said there's no shortage for either of the drugs from Novo or Lilly now. So those folks have to take them off the market.
Going back to this CagriSema, if I'm hoping I don't butcher the pronunciation.
Perfect.
CagriSema. Novo plans to seek regulatory approval in the first quarter of next year. What happens if it gets approved and if it doesn't?
Yeah, so look, these are all drugs that are in the evolution of the pipeline of the company. So Wegovy from Novo is often viewed as less impactful in terms of efficacy than Lilly's Mounjaro. So here comes Novo with something that matches it, with a slightly different mechanism that potentially can help you maintain a little bit more muscle rather than what you get with some of these earlier versions like Wegovy. So that's the idea, but they still have to prove that. And then, of course, there'll be another generation that will come, triple therapy from Lilly. And so basically what they're trying to do is to keep raising the bar, and raising the bar on efficacy and raising the bar on giving you the good weight loss, i.e. less muscle, more fat.
Sam, I think a lot of pharmaceutical observers like myself, we're just focused on this weight loss stuff, but what should we be focused on? I mean, what's the important stuff going on in your world these days?
Yeah, in my world, as you know, Paul, one of the issues that I think the United States is dealing with is a big push against science. Is it explicitly against science? I don't know, but there's cuts to NIH, PhD students are worried, postdocs are worried. And the U.S. has been leading on science, and everyone's been worried about China taking over from in a lot of scientific areas. This is not the way to deal if that's the way you want to go, if you want to be still in the lead. So there's that. Then there is the pressure on vaccines and the ups and downs of, do we believe in MMR vaccination for kids, or don't we believe in measles, rubella, and etc.? I can't remember the other one. Mumps, sorry, vaccinations. And of course, you see that the cases have now reached 222 as of last Friday in the U.S. of measles. These are the things that I think the U.S. needs to grapple with. Is it for science or anti-science, or just in a period of cost cutting, or are we going to be, and are we going to be behind vaccines, which are the best way to protect people and reduce healthcare costs?
20 seconds left, Sam. What are you drinking these days?
Oh, let's see. This weekend, it was whiskey actually this weekend with haggis. I know it's the wrong time of year. But in France, it doesn't really matter because they're not Scottish, right?
Right.
So I'm trying to introduce my French friends to haggis and whiskey.
Very good. Sam Fazeli, Director of Research for Global Industry, Senior Pharmaceuticals Analyst.
The French and haggis?
Yes. Well, he lives on this farm in France. I don't know what's going on. I mean, it goes back and forth to London. It's a whole story. I don't want to get into it. S&P 500 off 2%. NASDAQ off 3.4%. Yields coming in sharply. 10-year Treasury 4.21%. This is Bloomberg. Good morning.
Listening to Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, we have Isabel Lee sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube, so head over to youtube.com/Bloomberg Podcast Live, and that's where you'll find us. S&P down 2%, but the NASDAQ down 3.6%. So tough time in the world of technology. Speaking of tech, let's check out with Mandeep Singh, Senior Tech Analyst for Bloomberg Intelligence. He's now over in our London office, Queen Victoria Street in the city of London. Mandeep, let's start with TikTok here. President Trump was out over the weekend saying, I think he's playing investment banker here, M&A banker. There may be 4 bidders in play for TikTok. Don't we have to have something that has to happen with TikTok like sometime in the next month or so?
Yeah, I mean, look, he extended the kind of the ban for the app, and it looks like here he's saying it will be a different sort of structure when it comes to a deal for TikTok. Not an outright sale, but sort of licensing the content, and you know, the companies that are in play range from private equity to even a company like Perplexity, and Alexis Ohanian, the CEO, the co-founder of Reddit, is also being talked about. So it's not very clear, you know, how a sale would happen, because obviously, you know, the Chinese company wants to keep a stake, and at the same time, you know, pacify the concern they have around the security of the data here in the U.S.
Mandeep, what about the 4 buyers that Trump is said to be negotiating with? How are those going to play out? Are they serious contenders?
Yeah, they are. So that's where I mentioned, Perplexity, Reddit, and there's talks about private equity. And look, I don't think any of the hyperscalers are in play here in terms of buying Reddit. So it's really somebody outside a consortium, whether it's, including private equity or not, it remains to be seen. But any valuation here, I mean, an outright sale would be around 35 to 40 billion. We don't think that's the way things are headed, at least for now. But as I said, there was a licensing arrangement that was talked about as a potential way to, sell part of the assets here for TikTok US.
Mandeep, would there be a equity stake for the U.S. government somehow? Is that something that could happen?
I would be very surprised if that's the case. There have been talks about a sovereign entity here, a fund that's created. But I mean, I would be very surprised if this is the first transaction they end up doing in terms of buying a stake in TikTok.
What about extending a deadline again? Is that a possibility you see playing out?
Possibly, because, when something has passed in the Congress, which was the case with the TikTok ban, and the fact that, a new administration comes in, kind of buys some time here, and then they don't really have a good deal to say, okay, the concerns have gone away. And to my mind, this is not an easy deal, even though, the administration is actively involved in coming up with a resolution. So the extension of deal could be a very likely scenario here, given the complexity of the deal.
Mandeep, as we like to characterize it, the tech-heavy NASDAQ is down about 13% from its recent high, suggesting that investors are very concerned about the tech sector. But I saw that Taiwan semiconductor sales quickened in the first 2 months of this year, suggesting maybe some good buying out there continued for AI. What are the fundamentals out there in terms of chips and kind of this AI spend cycle?
Yeah, look, this has been consistent with their monthly sales data in the last few months. So you're right. I think what we can extrapolate here is that the AI momentum remains strong, especially for things that were undersupplied like the GPUs. And look, TSMC's top 2 customers are Apple and NVIDIA. So I think this bodes well for NVIDIA. Not so sure still about Apple refresh cycle. And that's where the smartphone demand continues to be something that investors are concerned about in terms of a refresh cycle. But clearly, 40% growth for TSMC looks solid for NVIDIA demand, at least for now.
All right, so you're at the Bloomberg headquarters in London, right, Mandeep?
Yeah.
Okay, after work today, you're going to walk over across the street to the old Watling pub. Mention my name, they'll take care of you.
All right.
That's the way you go. They know me over there. Mandeep Singh, senior tech analyst for Bloomberg Intelligence. He's over there. He heads up our global tech franchise there. And we've got analysts based in North America, including Silicon Valley. We've got them over there in London covering the technology scene there. And as well, a big group over in Asia covering, obviously, the key area of the world there in Asia for global technology. Mandeep, he heads that up, so we love getting a few minutes of his time here. It'd be interesting to see TikTok. Are you a TikTok person, Isabel?
I'm not. I'm an old person, old quote-unquote person.
Yeah, in this room, you got to...
Right.
I mean, I watch my TikTok videos on Instagram.
All right, very good. So, but something's got to happen with TikTok soon, and I can't imagine it would be outright banned here. So we'll stay on top of that. All right, for our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Oracle. Stay tuned for the latest market news and industry research. We got a lot more coming up here. S&P 500 off 2%. NASDAQ off 3.75%. We are plumbing the session lows here, so no support here yet for the equity markets. Yields come in. 10-year Treasury yields in 10 basis points. We're now at 4.19% here. WTI crude oil for Alex Steele. We're going to touch base with her in just a moment. $66 a barrel. This is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, coming up in this hour, we're going to check in with Alex Steele. She is in Houston, Texas at the CERAWeek Energy Conference. She's going to be interviewing Baker Hughes CEO Lorenzo Simonelli. That'll be in just a couple of minutes, so stay tuned for that. Nathan Dean will also join us, Bloomberg Intelligence Senior Policy Analyst. He's got to help us make sense of what's happening down there in D.C. as we think about tariffs, as we think about a government potential shutdown. Tim Urbanowitz, he's the Chief Investment Strategist at Innovative Capital Management. He's going to join us to give us his thoughts on these markets. Ben Elliott, Bloomberg Intelligence Consumer Finance Analyst, get this rocket to buy real estate broker Redfin for $1.75 billion. Didn't see that coming, but we'll get the latest reporting there. But first, let's go to John Tucker and get a Bloomberg Business Flash.
Lots of red on the screen. Recession fears growing with the trade war heating up. The NASDAQ 100 plunging right now. Actually had to resize my screen to capture this. It was down about 12% from its record high. Right now down 11.8%. So that does fit the definition, our definition of correction. The Mag 7 stocks leading the declines. You have Apple down over 5%, Nvidia down 5.3%, Microsoft down over 3%, Tesla down 8.5% in today's trading. And investors are putting money into the safety of U.S. Treasuries. The 10-year right now is down 9 basis points as they bid up the price. Right now, the yield 4.20%. And Andrew Sheets at Morgan Stanley says the U.S. may now see a slowdown sooner than expected.
We are effectively bringing forward some of the slower growth and stickier inflation that we saw kind of happening later in the year and into 2026. We're bringing that forward into 2025.
And as you mentioned, Paul, deal news, Rocket buying Redfin, all-stock deal with Rocket paying $12.50 per Redfin shares. And right now, Redfin shares are up over 72%. S&P 500 down 2%, a decline of 116 points. 56.54 in the index right now. The Dow Jones Industrial Average is down 340 points. The NASDAQ 100 down 650 points. That is a decline of 3.2%. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Isabel and Paul.
John Tucker, thank you so much. We appreciate that. Isabel Lee sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our New York Interactive Broker Studio, streaming live on YouTube. Let's head down to Houston, Texas right now to our very own Alex Steele. She's going to be speaking with Baker Hughes CEO Lorenzo Simonelli. Alex, what do you have for us?
All right, thank you so much, Paul. It's right. Lorenzo Simonelli is chairman and also president and CEO of Baker Hughes. Lorenzo, it's good to see you. Thanks for joining.
Alex, great to see you as well.
You're one of the premier oil services providers in the entire world. Everyone is worried about a recession today. Are you seeing any signs of slowdown?
There's clearly a lot of volatility happening in the marketplace, and we've seen that last week and also today. At this moment in time, if you look at the macro trends, there are still tailwinds that point to no recession. The consumer's resilient, and from an activity level, as we said at the beginning of the year, we continue to see a positive outlook for Baker Hughes as an energy technology company.
And that has not changed in the last 2 months.
It has not changed, and again, we monitor the situation on a daily basis. I think, again, you've got the macro aspects from an energy perspective that are clear. Energy demand is increasing, also here in the United States. Natural gas is a huge opportunity, and we've got a huge opportunity from an export perspective of LNG. So when you look at a company like Baker Hughes, we see a lot of positive trends that go beyond just 2025, and you'll always have volatility, but again, nothing that we're worried about at this stage.
And there are lots of sections, as you mentioned, right? There's the oil services demand side. You also make LNG export facilities. So you have a lot of different hands and a lot of different things. So there's that part of it too.
Correct. We're less cyclical, for sure.
The issue, though, is the tariff situation, which it would seem like you're very exposed to. If we get aluminum, steel, and copper tariffs, if we get them on Wednesday, 25%, does that affect the pipe you're going to put in the ground?
It really varies, and the tariffs are complicated, and you need to go into the full supply chain and also end-use perspective. We at Baker Hughes have a very diversified supply chain. We're not the original maker of the aluminum or the steel.
Right.
What we're providing is equipment and services, and we're also providing modules. And we have a versatile supply chain that enables us to both from the U.S. as well as from internationally and from an export and import perspective, be able to be diversified and move things around. So as we look at it today, we anticipate that the tariffs will have negligible impact on Baker Hughes, and we're continuing to assess it on a daily basis.
So basically the supplier might increase prices if they need to, but you can manage it or pass it on?
We can manage it because also we can change supplier. Also, we can work with the end customer with regards to efficiencies and changes. And so through a number of different scenarios, we look to manage that and work collaboratively with the end customer.
The other big macro tailwind, actually, is drill, baby, drill. That has been a cornerstone of the Trump administration. Where you sit, are producers drill, baby, drilling?
What you're seeing from this administration is clearly an energy renaissance in the United States. And when you look at the opportunity ahead, it is for increased production, both on the oil side, the natural gas side. When you look at the aspect of the operators, they're going to continue to be that capital disciplined. They're going to look at the financial returns. And we haven't seen any changes to date in the outlook of that. We do think U.S. production will go up, driven predominantly by efficiencies and technology enhancements that we're providing to the sector. And then we see a big opportunity with natural gas, and also as you look at natural gas pricing remaining to be resilient with the opportunity of the LNG exports coming online.
But you don't see the world where we have 1 million barrels of growth a year like we saw in 2023. Do you see a more muted growth profile for oil in the U.S.?
It's going to go down to the fundamentals of the demand and supply, and also the returns from a shareholder perspective. And I think companies have worked on their capital discipline, so they're going to make sure that that is all in balance, as well as meeting the needs from a societal perspective. So I think it's going to be more muted than 1 million barrels. You are going to those see continued production enhancements and efficiencies, and people will look at the price of oil on a regular basis and then decide accordingly what's best for their shareholders.
Yeah, and a tough tape for oil price today, to be sure. So let's get to the other potential tailwind, and that is AI and data center build out. How can Baker Hughes play in that space?
Well, it's a great opportunity for Baker Hughes. And when we think about the grid instability and also the huge increase in demand for power generation, it really fits into off-grid applications where we can provide our industrial gas turbines, we can provide our geothermal technology, we can provide a number of factors to enable the hyperscalers to go and produce the data centers immediately. We've already seen an increase in activity. You'll have seen an announcement we made last week with Frontera with regards to data centers, inclusive of CCS. And it's not just a phenomena within the United States. Clearly here, it's spoken about every day, but also globally. We're seeing increased activity within other areas such as the Middle East, such as Asia, relative to data center demand. And generative AI, we know, has a huge energy consumption, and that's what we're servicing.
And that also comes from your industrial and energy technology business, hence the diversified part we were talking about earlier, making it a little less cyclical. In terms of that, can you also become a services helper for power demand? Like, not just here's my gas turbine, but I'm also going to be a services provider for this data center in terms of power?
We're looking at different commercial models and actually working in consortiums. And I think there's going to be different models that different end users require. In some cases, we will be with a developer, we will be with a financier, and it will be a turnkey solution that's provided to a data center operator. In other cases, they'll just want the equipment and they'll want to have the power turned on. So we are, like in LNG, able to have the different model that's required for the end user. And that's something at Baker Hughes we think is very important. We've got to be able to meet the different requirements with the capabilities we have. So we're looking at a variety of options right now.
I'm glad you brought up LNG again. Do you expect, if there is an end to the war in Ukraine, are you guys at the table thinking about a lot more Russian gas coming into Europe and then displacing flows that we see elsewhere?
I think we're confident that flows have redirected themselves already. And
to account for Russian gas?
Well, yes, because the Russian gas has been flowing elsewhere as well. So there's an aspect of a demand that's increasing, and there's going to be a requirement for incremental natural gas and LNG. As we look out to 2030, we've always said there needs to be an installed base capacity of 800 million tons per annum. That is very much taking place, and we see the incremental build now happening in 25, 26, and 27 with the pause being lifted in the United States. So we don't see the aspect of Russian gas coming back as differing the outlook that we had previously, because it's been there, it's just been elsewhere. And the flows will always change according to what's available.
Would Russia, though, become an opportunity, a business opportunity for you?
Let's wait and see.
Okay.
You know, we'll monitor the situation relative to global sanctions, also the rule of law, and also from a society perspective and values within Baker Hughes. So we'll monitor the situation.
One last question. Oil price weakness, does it persist? And what do you think is actually behind that right now?
We live in a world where on a daily basis there's a lot of different news, and so there is volatility in the marketplace. I think give it some time. We've got to look at the next 6 to 8 weeks, and I think that's when you start to really assess, are there going to be changes going forward? Right now, demand is strong. We know that the outlook for demand is strong, and I think we're just going through some volatile times. And at Baker Hughes, I can tell you, I don't look at the oil price daily. Not a consideration relative to the investments we make longer term, and also the way in which we run the business so that we can safeguard the supply and the end product for our customers.
They always say that. They never look at the oil price. All right, Lorenzo, thanks a lot. I really appreciate it. Lorenzo Simonelli, Chairman, President, and CEO of Baker Hughes. Paul, back to you.
All right, Alex, thank you so much. We appreciate that. That's Alex Steele speaking with Baker Hughes CEO Lorenzo Simonelli at CERAWeek. That is where all the energy honchos globally get together in Houston. It's their big conference every year. Looking at WTI crude oil, it's off 50 cents here today, sitting right there, $66.50 per barrel. Let's get to Washington, D.C., get the latest on what's happening there. Almost our daily check-in with Nathan Dean, because he's the senior policy analyst at Bloomberg Intelligence based down there in Houston. Nathan, let's sidestep tariffs for the moment. Let's talk about keeping this government open. Can you give us a guideline? Where are we and what do we need to pay attention to?
Yeah, so over the weekend, we saw House Speaker Mike Johnson and the House Republicans release a 99-page bill. It is a 6-month continuing resolution that would keep the government open until September 30th. There's a little bit of policy writers in this bill. You know, there's a lot of talk about a clean CR, aka just keep the funding going. This is a cleanish CR. There's additional funding in here for immigration and for defense, but a lot of the more policy writers that Republican or Democrats had feared would be in there isn't in there. Now, the challenge is that Speaker Johnson wants to have a vote tomorrow night, Tuesday night. He can only afford to lose one. And, I wouldn't be surprised if this bill doesn't move forward, just because that's a quick time frame to try and get the entire Republican caucus on board. Now, if this bill doesn't move forward, I look for the Senate to then just call for a 1-month extension, and we'll have this interview sometime next month. If the bill does go forward, well, then it's up to the Senate Democrats, because remember, this isn't going through reconciliation. You need to have 8, most likely 7 or 8 Democrats to go with this to overcome a filibuster. And this is the challenge of, will we get a shutdown or will we not? I don't think we'll get a shutdown. I don't really think there's much appetite for shutdowns on either party at the moment. So either they'll get a deal done, or I think more likely they'll kick the can 1 month, and we'll talk about this in April.
Seems like most Democrats and Republicans alike have various concerns about the bill. Can you touch on the main points of one party and the other?
Yeah, absolutely. So, on the Republican side, obviously this is a clean-ish bill, which doesn't really give them exactly all they want. I mean, there's additional, look, I mean, the Republicans want lot more funds for the Department of Defense. They want a lot more funds for immigration. This is just a small subset of that. On the Democratic side, well, look, you're not going to be voting for something that actually increases the budget for immigration and for deportation strategies. So the Democrats in particular aren't really, want to go along with regardless. There's a lot of anger on the Democratic Party in terms of DOGE at the moment. And, there is some language in here that gives additional flexibility to the White House in terms of spending, not to the point where it would be controversial, I think, but enough to that the Democrats won't want to get on board. So, but again, the idea here is that shutdowns usually occur when both parties feel that their position is politically advantageous, and I'm just not getting the sense from the Republicans or the Democrats at the moment. If there is a shutdown, remember, the Republican agenda in the House essentially gets delayed until the government reopens. A lot of President Trump's agenda will be delayed, and the Democrats historically have viewed shutdowns as bad for politics. So I think for those folks who want to see if they can go visit the pandas at the zoo this weekend, chances are you're going to be able to do so.
All right. But if there were a shutdown, would the blame go on the Republicans since they control both chambers?
It depends. I mean, obviously, if a shutdown occurs, and look, maybe Congress comes up with a deal, and President Trump at the last moment says, no, I don't want to sign this, therefore there's a shutdown, then I think the Republicans would get some of the blame. If it's a clean-ish CR, and the question is, are you going to pass this, or are you going to shut the government down, the Democrats could potentially get a blame. But here it is, we're in March of 2025, and the election isn't until November of 2026. So even though there could be a political price to pay, there's so much time on the going forward that I'm not sure either party is really going to pay that much of a political price. So we'll see what happens. But again, I'm not exactly sure that now's the time for a shutdown. I think that threat for a shutdown could come later this year or the beginning of next year when both parties shore up their positions.
How much of the anxiety over this shutdown could bleed into the debt ceiling debate, which will take place likely in the summer?
That's a great question because, from the market impact, government shutdowns really don't have all that much impact. If you go back to the 35-day shutdown that occurred under the Trump administration, the first one, you saw the markets dip and then subsequently rose above to where they even began the shutdown. But there's a lot of angst, though, when it comes to shutdowns because can this bleed into the debt ceiling debate that's going to come probably in June or July? And the answer is obviously, because if government can't pass a funding bill, how are they going to pass something like the debt ceiling? Now, we have an 80% chance the debt ceiling debate is resolved. We don't think either party wants to see a debt ceiling crisis take place this summer, but you still have to ask the question because the way this works is there's a lot of negative headlines, a lot of headline risk that leads up to a solution. Then the solution breaks down. Again, a lot of negative headlines, but ultimately a resolution. And I think a lot of the angst with shutdowns bleeds into this debt ceiling debate that we're going to see this summer.
Nathan, thank you so much. Always appreciate getting a few minutes of your time as we try to figure out what's going on down in Washington, D.C. Lots happening on a daily basis. Nathan Dean, Senior Policy Analyst for Bloomberg Intelligence. He's down there in Washington, D.C., and such value to our Bloomberg clients to figure out what's going on in D.C. and how it impacts their investments. A lot more coming up. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom with this Bloomberg Business Flash. We're being brought to you by Oracle. Attention growing businesses, Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitment. The offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. Well, worries about the economy and the Trump administration tariffs sending stocks farther from their records set just last month. More economists expressing recession fears. You also had a widely followed collection of real-time indicators. These are compiled by the Federal Reserve Bank of Atlanta. That suggests the economy may already be shrinking. Some of the individual shares, NVIDIA, that is falling another 5%. So this brings its loss for the year so far to 20%. Tesla's first quarter and 2025 delivery estimates, as well as its price target, all being lowered by analysts at UBS. They say they see about a 30% downside to the company's consensus earnings expectations for the year. Right now, you have shares of Tesla. They are down 8.5%, adding to the sell-off in the NASDAQ 100. It is down from its peak right now close to 12%. So that is correction territory. The share of households expecting a worse financial situation 1 year from now rising to 27.4%. That is the highest level since November 2023. This is according to the New York Fed survey of consumer expectations. We did get that one just this morning. And as we look at the major indexes, the S&P 500 down 114 points. That's down 2%. The Dow down 357 points. The NASDAQ 100, this is a 3% slide in today's trading, down 614 points. Somebody asked me about Bitcoin. Bitcoin down right now 3.5%, right around 80,000. But since its peak, Bitcoin down 25%. It's lost a quarter of its value since its peak. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Isabel and Paul.
John, so Tesla's down 40% just this year. Do you think Elon cares?
No.
Yeah.
Well, let me put it this way. I haven't seen any indication from him that
I haven't
it's
either.
a major concern.
I haven't either. Very interesting here. That's real money there. And again, so got a lot of volatility as the name of the game here in marketplaces, and we know that markets do not like volatility. So we see that in the price action here. Let's see what the pros are doing here. Tim Urbanowitz, Chief Investment Strategist at Innovator Capital Management. He's somewhere out there in Chicago, one of my favorite towns, absolutely. Hey, Tim, talk to us about these markets here. You talk to your clients. How do you, is it hand-holding? What are the conversations these days?
Well, Paul, there's a lot of jitters out there, and every conversation that we are having right now all comes back to the question of what's going to be the net impact of all these different policies from the Trump administration. And, right now, I think there's this mindset shift that, everybody was really excited about the pro-business policies of the Trump administration. Now, I think it's becoming pretty clear that Trump realizes he needs to slow this economy down if he wants to get interest rates and inflation under control. And there's really two ways that he's going to be able to do that. One is pulling back in government spending, and I think you're seeing that through DOGE, and then also with the tariffs. Tariffs, we view that as really a tax on the consumer that is going to put additional pressure on consumers that are already under stress. And I think what he's going for here is long-term gain with the fact that we know there's going to be continued short-term pain, and he's okay with that. You're not going to get the approval of the everyday American if the stock market's going up. He touted that the first time constantly. That's not the case this time. He's not talking about it at all. And I think it really comes back to that realization that if we are going to get interest rates down, if we are going to get inflation under control, there has to be some pain that comes along with that. And I think that's what you're seeing right now.
In your note, you mentioned that the majority of investors were not taking Trump seriously when it comes to tariffs. So now it seems like he is serious, and the velocity of the shift from excitement to fear has been swift. How are you trading this market? Where do you hedge?
Well, really, and the bulk of what we do is risk management, at all times. And if you look at the flows that we've seen here recently in the ETF market, we've seen a tremendous amount of inflows here to the tune of about $1 billion over the last week and a half into buffered ETF strategies. And really what these do is they give you a known level of downside protection on an index like the S&P 500 ETF or the NASDAQ, with known upside exposure. And I think right now we look at all the uncertainty that is out there, the fact that, on the flip of a switch, Trump could come out there, pull back tariffs, and this market could rip higher, or you could continue to see this tit for tat. There's so much uncertainty, and really what these strategies do, and why I think so many investors are gravitating towards these, is that they do help remove a lot of that uncertainty. They keep you invested, which is incredibly important, especially right now. But they also are going to help you really hedge out and mute a lot of this volatility that we're seeing, coming from the Trump administration.
Talk to us about the fixed income market here. We've got big moves today here in the bond market. Treasuries, 10-year Treasury up 20 basis points, kicking the yield down to like 4.22% here. Where's opportunity, if anywhere, in the fixed income market?
Well, Paul, I think we're starting to get a little more bullish here. This has been an area we've been very bearish on for the last couple of years, simply for the fact that, most advisors that we're working with are using these as a risk management tool, right? And we continue to see bond yields and equity prices moving in the same direction. You don't have that diversification that most advisors are going for with that. I think with some of the changes that we've seen here recently, there's starting to become more opportunities. If you look at bond yields and inflation, really over the last several years, they've followed this government deficit as a percentage of GDP almost in lockstep with one another. So as we see more and more, hopefully more success from the Department of Government Efficiency, from the Trump administration, being able to pull back that spending, I think that gives us more hope that we can see, interest rates start to work, or that inverse correlation start to work a little bit better, that interest rates can come down. And again, a slowing economy too, that should help us out on the longer end of the yield curve. So I still do think it's a risk with the environment that we're in right now, with core inflation still elevated. But I think for the first time in a couple of years, we're starting to see signs that the long to intermediate duration bond trade could be showing some signs of life here.
When it comes to inflation, we have Mohamed El-Erian in an opinion piece today saying that the Fed's insistence on keeping inflation to 2% may be limiting its flexibility. Where do you stand on that, on your inflation views?
Well, I don't think the Fed is going to move on it. So I think it's a fun thing to debate. I don't necessarily know if it helps investors in the short term. And look, you look back in the history of the U.S., any time that we have seen core inflation starting off north of 5% or above, never before have we had a situation where we've gotten back down to 2% without a recessionary hit to the labor market coming. And, what we've heard for the last several years, even from a lot of our, advisor clients, is that this time is different. And look, I hope it is. I hope this time is different, where we can get back down to that 2% target without a huge hit to the labor market taking place. But we don't want to just go out there and position our portfolios like that's going to be the case, because it would, in fact, be a unicorn event. And I think, a lot of this comes back down to how strong the labor market has been over the last couple of years. Wage growth still running north of, well north of 4%. That's not conducive with a 2% inflation target at all. And, I think what gives me a little bit of hope that we are going to get back down there, within the next year or so now, is if you look at all the layoffs that are taking place within the government. Over the last couple of years, you've had about a quarter of all new jobs that have been created by the government. We're starting to pull that back. You're starting to see, a lot of those layoffs, which I've seen recent estimates in the 300 to 500,000 range. Those are going to be jobs that are going to be replaced in the private sector. So there's going to be a lot more supply coming to market, which I'm hopeful that will really soften things up to where we need to be.
Tim, thank you so much for joining us. Tim Urbanowitz, Chief Investment Strategist from Innovator Capital Management. Nice M&A trade on the tape today in the financial services business. Rocket to buy real estate broker Redfin for $1.75 billion. Let's get some details on that. Ben Elliott, Bloomberg Intelligence Consumer finance analyst, joins us here. Ben, talk to us about this deal. Do you like this deal? The Redfin shareholders certainly like it.
Yeah, I don't think the Rocket shareholders like it quite as much. I think when you first look at it, you see the headline, 50 million users a month. Sounds like a great way to acquire customers, but if you dive into it, Redfin is doing mostly real estate brokerage as a business, which is, earning commissions from buying and selling homes from their agents, and that's not Rocket's core business. So it begs the question: how will they really monetize this, and did they pay too high of a premium?
Does this deal make sense to you? Like, why would Rocket be interested in Redfin?
Yeah, so Rocket's interested in anything that increases the size of their funnel, as they like to say, and drives more people to the mortgage platform. That's really where they're going to make their money off this deal. If they can convert 50 million monthly users into a couple 100,000 mortgage customers, that could end up being a pretty good deal for them. But the question is, what do they do with the brokerage business, which is going to kind of be sort of ancillary to the core mortgage business. And then also, if you look at Redfin, they've been a little distressed lately. They've had some restructurings in 2024. They had a deeper cut in 2025. If you look out at sort of the macroeconomic outlook, is this the right time to be buying a platform like this? I think there are a lot of questions around this, which is why the market's sort of dubious of the deal.
Yeah, Rocket stops off about 14%. Redfin up about 70%, 7-0 here. Talk to us about valuation there. How's it shake out for you?
Look, so the valuation of a mortgage platform, right? It's inherently a cyclical business. Historically, M&A to grow the mortgage platform has not made a lot of sense. Rocket can usually get a better ROI by investing in its own tech platform, trying to drive the business that way. But increasingly, they're trying to bring AI to bear. And I think the value here at Redfin is going to be the data. They're going to have a huge amount of data on just existing homes, customer behavior, who has an intent to buy. And that, I think, over the long run, is going to enhance the platform and Rocket's ability to convert someone into a Rocket Mortgage customer. And the question is just whether, paying a 63% premium to Redfin's prior close is going to be the right price for the deal.
All right, very good. Appreciate that. Ben Elliott, Bloomberg Intelligence and Consumer Finance Analyst. Again, an M&A trade in the online real estate business, Rocket, to buy Redfin for $1.75 billion. Again, Redfin shares up about 70%, 7-0. Rocket down about 14%. People concerned about that valuation, which is often what we see. But I like them because they give you a good sense of what your house is worth. You drive by and you see a house, you pump it in there into the Google, and Redfin pops back, this house is worth X.
It's also interesting because Rocket posted its first annual loss as a public company. So I'm curious, maybe this is one of their ways to move past that. But yes, I love looking at homes. Homes especially I can't afford, and that's my favorite pastime. Exactly.
All right, we're going to have more coming up here. Looking at this market, sell-off continues here for sure. Coming up, BNEF Antoine Wagner-Jones, BNEF Head of Trade and Supply Chains, on the BNEF theme here. Energy enters choppy waters as trade barriers surge, and he'll be in our studio giving us the latest on the energy space. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. We're being brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with a 2-to-1 advisor-to-staff ratio. Small firm attentiveness, big advisor impact. Go to Commonwealth.com to learn about their consultative support and technology. Well, if today's sell-off holds at current levels, the NASDAQ 100 will be in correction. It is down 11.4% from its recent record. And it's the Mag 7 stocks that are leading declines in terms of the index points. And then it's Tesla that's leading the Mag 7 lower. It is down right now. Tesla shares, they are down, let's see, close to 8% in today's trading. By the way, you asked this before about Elon Musk. Since the start of the year, Tesla stock is down 40%. Elon Musk, by using the Rich Go function on the Bloomberg, he has lost $557 million just today so far on paper, and $103 billion
that's real money
since the start of the year. But he's still number one in our ranking of the world's richest. Meantime, Amy Wu Silverman at RBC Capital Markets says investors are not yet showing signs of panic.
Year on year, obviously, all your volatility stats are higher, not too surprising given the market move. But right now, we're sort of still in this garden variety drawdown. And the big questions I will tell you institutional investors have is, are we going to get to that second tier of fear?
The S&P 500, 114 points lower, down 2%. The Dow Jones Industrial Average down 443 points. The NASDAQ 100 down close to 600 points. That is a decline of 3%. Money's going into the perceived safety of treasuries. The 2-year is down 8 basis points at 392 as we bid the price higher. The 10-year yield right now down 8 basis points. That is at 421. And consumers growing more pessimistic about their finances. 27.4 expecting their year-ahead financial situation to be somewhat or much worse off. That's the highest level in 15 months. This is from the monthly survey from the Federal Reserve Bank of New York that we got today. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Isabel and Paul.
And John, you mentioned Musk at $329 billion, down $100 billion. But tied for number 2, it's not even close, John, are Zuckerberg and Bezos at $220 billion. So, I mean, Musk has still got 100.
Big gap.
That's a big gap there. So he's still comfortably ahead there. John Tucker, thank you so much. We appreciate it. Isabel Lee, Paul Sweeney, live here in our Bloomberg Interactive Broker studio. We're streaming live on YouTube. Head over to youtube.com and search Bloomberg Podcast Live. And that's where you'll find us. We talk every week to our good friends at Bloomberg New Energy Finance, BNEF. Now we've got to talk about tariffs and what that means for green sectors from energy to biofuels. Today we do that with Antoine Vagnon-Jones, Head of Trade and Supply Chains for BNEF. Antoine, thanks for being in our studio here. Tariffs cannot be good for the evolution into green energy. How do you guys think about the risks that are being introduced into that?
Yeah, there's at a time where everything is whipsawing and we're seeing a lot of differences in terms of policy approaches, what's really interesting is to see areas of continuity. Trump is very much on board with manufacturing in the US. That was something that was very much a part of the Biden administration. The way in which that's happening is very different, however. Essential planks of Biden's approach was to be, okay, we're going to onshore semiconductors, we're going to onshore clean energy manufacturing. And what we've seen now is an attack on the Inflation Reduction Act, rhetorically a version that's starting to build on the CHIPS Act, these big sources of finance for a lot of these projects that are happening in the US. At a time when tariffs are starting to be stepped up as a response, and this is building on a lot of tariffs that we saw on the Biden administration front, that has to be twinned with support for some of these different sectors. When that's being pulled out, then it starts to become very uncertain. And when you're seeing the levels of volatility around tariffs being announced, being pulled back, being re-announced, when things are really unclear in terms of what's going to happen, that's not great for businesses that need to make decisions on investment that has quite a long payback period. And we're not quite seeing the upsurge in manufacturing investment that we're expecting to see over the first few months as a result. So it's an interesting time. There's a lot in flux. It's bad news for green energy, as you can expect. But it's also not necessarily great news for some of the objectives that are a central part of Trump's agenda, whether that's building out data centers. You need a lot of grid equipment. A lot of that comes from Mexico. That suddenly becomes a lot more expensive if you need all the transformers that you need. And the examples along that line of thinking just are never ending. So it's a lot of uncertainty and not a great outlook when it comes to this idea that tariffs equals manufacturing, but actually the path to getting there is a lot more fraught than I think is appreciated.
I was just going to ask, will we see a shift into EM? Are they starting to ramp up imports of clean tech products? I mean, maybe they could stand to benefit?
Yeah, it's we generally speaking, yes, we could start to see a rise from that perspective. But again, I think a lot of the constraining factors there are on grid investment rather than the cost of clean energy. And that's where we're starting to see some real pain points when already there's some big shortages of large power transformers, for example. And that's something that is repeatedly a huge concern and something that is made materially more difficult to integrate that sort of clean energy if you're making building out the grid a lot harder. So there's a lot of recurring themes that keep popping up, and that's one of them.
How about nearshoring? We thought about North America as nearshoring, Canada and Mexico, but that may not be enough because now we're talking putting tariffs on those folks as well. So it sounds like if you want to manufacture anything, it's got to be almost entirely United States based.
And that's what's fascinating. So over the last few years, we've seen all these different buzzwords: onshoring, reshoring, nearshoring, this idea, which was promoted by the Biden administration, that will have certain incentives for manufacturing, or will extend those incentives for manufacturing parts of EVs, for example, to our North American neighbors in Canada and Mexico. Now, when you're starting to impose tariffs on those same neighbors, then you're flying in the face of that trend, and it really seems like that's sort of dead in the water. I don't think we're going to see the death of integrated value chains for the automotive sector over the next few weeks. That's going to remain in North America, across North America, because of the inertia in the system, the efforts that are being made by lots of the big three automakers, for example. But at the same time, I don't think we're going to see the step up in investment in Mexican manufacturing that was due to serve the US market through this trend of nearshoring, which now I really don't see as a political priority at all.
Interesting. All right, Antoine, thank you so much for joining us. Antoine Vagnon-Jones, Head of Trade and Supply Chains for BNF, joining us here in our Bloomberg Interactive Brokers studio. Earlier today, Joe Dominguez, CEO of Constellation Energy, spoke with Bloomberg Intelligence co-host Alex Steele about the impact of tariffs on energy investments at CERAWeek in Houston. Joe was first asked about the recession and slowing growth, and he was asked if he's noticing any of that at Constellation. Let's take a listen.
We don't see an end in sight right now. We're starting to see it get rationalized. And by that, I mean, we're not seeing the same requests for data centers popping up in 5 or 6 utilities. So I think the hyperscalers are beginning to figure out where they want to go. And it's not the frenzy of activity. But in terms of the deal pace, it continues the same way we saw it last year.
And how are the deals? Like, how is it to get them done? Is it hard? Is it coming up with the structure, the money? Like, what is it?
It's not hard, but they're complicated because they're multi-billion-dollar deals, right? So we're talking about 20-year deals for power that sometimes could cost $5 or $10 billion. So like any commercial deal of that scale, it's going to take a long time to negotiate. And each time you need to do that with a new party, you have to go through all the terms and conditions again. But I think we're going to get some deals done this year.
Can you give me some hints, like in maybe areas, what kind of deals, like what kind of power?
Well, I think nuclear continues to be very attractive for the hyperscalers because it operates 24/7. It's clean, so it meets their environmental goals, and it matches up really well from a reliability standpoint.
So let's go to money then for a second.
Sure.
So coming up with the deals is very interesting, particularly the one you did with Microsoft to restart 3 Mile Island. Are your costs going up right now?
A little bit, but it's really labor inflation that we mostly see. Now, remember, we have existing nuclear plants that are already built. So a lot of the cost of the raw materials that you're seeing, potentially impacted by tariffs in the long run, but in escalation through inflation, we're not seeing much of that. Tiny bit on uranium pricing, but most of what we're seeing is labor contracting.
So are you planning for a tariff increase that we should be seeing on steel and aluminum on Wednesday, right? you would have that would have limited impact? How do you see that?
Pretty limited impact on us. It would impact replacement parts and that sort of thing, but it's going to be a de minimis impact on our budget.
And if you wind up seeing an increase, right, even in labor, how does that change then your contracts? Like, if you already said it, do you have to go back to them and say, hey, listen, we got to renegotiate, my costs are going up?
No, there's no reopeners up or down for those sorts of inflationary
So you're really
pressures.
taking on that risk then?
Sure, yeah, and we're taking it on for over a 20-year period. And that's the importance of being able to do this with nuclear, right? We know exactly what our cost structure is going to be within a range for 10 and 20 years. Harder to do with our natural gas assets, where we don't know what the price of natural gas is going to be 10 years out, or whether we're going to have a carbon tax, or what the changes in environmental regulations are going to be.
So how do you manage that risk?
Well, I think what's really difficult to do that in the case of natural gas. I think what you're doing is something that looks more like an index product that is indexed to either inflation or natural gas prices.
When you talk about the different parts of your business, how much of the CapEx that you're spending is going to new stuff, beefing up old stuff, or just replacing and making sure everything stays on track?
Yeah, so for us, Alex, we face a critical decision as to whether to relicense the nuclear plants for another 20 years. And we're facing that across the fleet. So when you say new, if we don't do this, it's going to be retired, very much like 3 Mile Island was retired. So the distinction between keeping existing open and something that's truly new is immaterial, right? If it's gone, it's gone. It's the same as if it were never built. So we are investing all of our monies to secure that fleet for the future. And we're also doing upgrades and restarts and other things like that. In terms of a percentage, to your question, I would say 90% of our spend is in the existing assets and getting them ready to run for decades to come.
So when we talk about power demand booming and increasing by multiple digits, right? I mean, 10%, 7% would be huge. How do you play that? Like, if it's not new, is it just expanding?
Well, it is expanding. A lot of our clients are interested in uprating. That's increasing the output of existing nuclear plants, and we're doing that in a number of different regions. Obviously, the restart is more limited. You had one plant there that you could turn on, and I think there might be another in the nation. And then the rest of that is going to be probably spent on renewables, storage, and natural gas for the time being, and in the fullness of time, new nuclear.
M&A for that? I know you just bought Calpine, so that really beefs up your natural gas. Nuclear is now 50% of your portfolio versus, say, 70. That was a big shift. What else is in your pipeline for that?
Well, we've got a lot on our plate.
Okay.
We've got a
You're
lot
busy.
of food to eat. Yeah, and so this year we're going to spend making sure that we're ready to integrate Calpine and prepared for regulatory approvals at the back end of the year. But as you said, it's a big deal. And I think what we've indicated as a company is M&A is a big part of our strategy.
Yeah, yes. M&A in beefing up nuclear, natural gas, or you want to diversify
All
into
of
other?
the above. All of the above. I think storage is going to increasingly be a part of the story, so we'll look at those opportunities as well.
Everyone now wants to get into power. It is the coolest thing right now in the market. Whether you're looking at integrated utilities, regulated utilities, even energy companies, are you seeing more competition?
I think what people are trying to figure out is whether they too can secure longer-term contracts. I don't see people building spec power plants hoping, the demand will come. So I think there's going to be a lot of interest there, but it's largely going to be fossil. It'll continue to be renewables, but it always has been renewables, and then we'll see whether they could get deals done.
All right, that was Alex Steele, Bloomberg's Alex Steele, speaking with Joe Dominguez, CEO of Constellation Energy, down there in Houston at the CERAWeek conference, talking about the energy biz, particularly on the nuclear energy side, where Constellation has a big play. Just looking at the stock for Constellation Energy Corporation, it's down about 5% today. It's down 10% year to date, but it's up about 18% over the last year. It's got a market cap of $63 billion, so one of the larger energy companies out there. Alex Steele interviewing the CEO. Let's switch gears. Let's go to our Odd Lots podcast. We have Tracy Alloway, Bloomberg Odd Lots co-host here. She joins us here in our Bloomberg Interactive Broker Studio. Tracy, as you can see on the screen, I know you're looking at it like everybody else, tons of volatility out there really over the last couple of months as the market tries to discount and understand the economic policies from President Trump. How do you guys deal with that on your Odd Lots?
Oh man,
podcast?
It's been hard. We've been rushing out a bunch of emergency episodes, and by the time we run the episodes, sometimes Trump will have reversed his position completely, and they become rather irrelevant. But then the good news is, 2 days later, he reverses again, and we could just rerun the episode or encourage everyone to listen to it.
I was going to say that I love your lots more because I think that was the purpose of that, like to explain real time and to tap guests that are really knowledgeable. Not that the others in Odd Lots aren't, but they're more like friends, I think.
That's exactly it. It's friends of the podcast. It's a little bit more casual, and it's a little bit more on the news, so stuff that has actually happened that week. So that's been a really good venue to cover some of this volatility.
Andrew Ferguson, the new Federal Trade Commission chair for the Trump administration. What do we know about him?
Oh, that's right. So Joe and I are heading to Washington. We are holding a live event on Wednesday at the Miracle Theater from 7 p.m. You can find tickets on Bloomberg.com/oddlots. And our headliner is Andrew Ferguson, the new FTC chair. And I'm very excited about it because, we've interviewed Lena Khan. We've done a lot of episodes on hipster antitrust and the way they were approaching that idea. And I'm really curious if there's any through line between the Biden administration's view of antitrust and the Trump administration. Obviously, there's some overlap on big tech, but we really want to understand exactly what the new FTC is interested in, what they might be looking at. And so, we're going to get Andrew live on stage.
So what do we know about him? What do we think? I think everybody around the election was really positive about the Trump administration and what it would mean for growth in the economy, financial markets, M&A maybe with maybe a looser restriction. That narrative has changed almost 180 degrees due to all the tariff talks. But what do we know about how Trump thinks about the FTC, the Department of Justice, that kind of thing?
You're exactly right. And going back to market volatility, I think there was this perception that this was going to be an immensely pro-business administration. Maybe that's not the case, or certainly not to the extent that a lot of people thought. And that's one reason we're seeing stocks sell off today. So I think there's that same question over the FTC. Are they actually going to be looser in terms of some of the restrictions, antitrust on businesses, or could we see something that might have negative consequences for the stock, at least when it comes to big tech? That seems a particular sector where you might see pressure exerted from the Trump administration.
And I'm looking at the rundown, and it seems like there's some singing after. Can you share with us that one? And also, how is it like recording a live podcast? Do you feel more energized with a live guest? What's it like?
It's fun. You never know what's going to happen. There's a degree of audience engagement and interaction, and sometimes the audience gets rowdy at our events, but that's always fun. It's a challenge for our producers when there's background noise, but it's fun for us. And singing, yes. Listeners, attendees of the event will get the chance to listen to the dulcet tones of Joe Weisenthal. He's going to be playing the guitar and singing, I think, at least 2 of his songs. So that's always fun.
What's the name of his band again?
Light Sweet Crude.
Light Sweet Crude. So he is a kind of professional, right? He does this stuff in New York?
He has done paid gigs.
So,
Tracy and I watched together.
Yeah, that's right.
Okay.
I think Chelsea.
All right, Odd Lots had some great stuff. Tracy Alloway, co-host of Odd Lots. Again, check that out. It's a great podcast. And if you're in the D.C. Area on Wednesday, go check them out there as well. Looking at this market, it's tough morning for the markets across the board. The S&P 500 off 2.1%. The Dow's off 1.1%. That's 500 points even. The Nasdaq's really where the pain is. It's off about 625 points. That's 3.4% there. So some major sell-offs here today. Continuing the pain. Again, the S&P is off about 13% from its recent high. So some issues there. In the yield market, the Treasury market, 10-year Treasury yields in about 8 basis points. And so the 10-year yielding about 4.21% there. So some major movements there, Isabel, in the marketplace.
Definitely. And you see the S&P closing below its 200 moving day average. So that's the first time we're seeing that since November 2023. So could mean more pain ahead.
Yep, absolutely. In the crypto space, they're not escaping it either. Bitcoin off 3.7%. Just below $80,000, or right around $80,000 per token. We're going to have more coming up. That's it for Bloomberg Intelligence. Balance of Power with Joe Matthew is next after this global news update.
Thank you, Paul. That was fun. Thank you.
Are you here tomorrow as well?
Yes.
Great.
Thank you. I'll see you. Now you can go home.
This is CBS News on the Hour, sponsored by Progressive Insurance.
I'm Steve Kathan. Investors have the jitters as a sell-off hits the major financial exchanges. Crossmark Global strategist Bob Dahl says there's good reason.
Markets hate uncertainty, and the uncertainties around the economic trajectory, tariffs, tax cuts, the job market, inflation.
Ontario has slapped a 25% surcharge on energy exports to the U.S. Chinese tariffs targeting American farm products are in place now, too. Glenn Muller heads up the South Dakota Pork Producers Council.
We're concerned about the long-term impact of the tariffs and what they might have on our industry.
CBS's Nancy Cordes.
The Chinese know that Americans rely on Chinese goods far more than the Chinese rely on U.S. goods. And they also know the last time we went through this during the first Trump term, U.S. farmers in particular felt the squeeze. So China is in no hurry to go to the table.
Correspondent Scott McFarland tells us the Justice Department is now investigating what's behind the high price of eggs.
It's unclear, though, if this is going to be a large-scale Department of Justice investigation or whether this is just a response to the Farm Action Group's complaint. We do know, though, Farm Action Organization requested the Biden administration do its own investigation as early as January 2023, when it was viewed then as an egg price that was too high.
The U.S. Supreme Court's agreed to decide whether state and local governments can enforce laws banning conversion therapy for LGBTQ plus children. Legal analyst Lori Levinson.
There are legal issues ranging from the First Amendment to due process and to whether people have the right to make these changes in their lives.
Overseas, officials say all 37 people aboard two ships have been brought safely to shore after a U.S. oil tanker and cargo ship collided in the North Sea off the English coast. Secretary of State Rubio is heading to Saudi Arabia ahead of tomorrow's talks between U.S. and Ukrainian officials on the war in Ukraine. Steven Stastanovic is an ambassador at large, a former one, to the former Soviet Union.
President Zelensky has said he understands NATO membership is not for now, not for the foreseeable future, but he wants to know what other kinds of security guarantees the United States would offer so that Ukraine does not have to worry about a resumption of attacks.
1995 American League MVP Mo Vaughn tells The Athletic he used human growth hormone, that is, to extend his career. It comes 18 years after the Mitchell report. Dow's down 460. This is CBS News. Labor unrest in the Golden State.
Instead of light rail trains, commuters are hearing the sound of picketing at train stations across Santa Clara County as some 1,500 transit workers go on strike. What do we want? Contract! Karina Medina is with the Amalgamated Transit Union, Local 265.
Our hope is that this doesn't last forever.
The union is asking for an 18% raise over 3 years. Valley Transportation Authority General Manager Greg Richardson says a pay hike that high will result in service cuts.
Understand that we are doing everything we can to find a solution.
Matt Bigler for CBS News, San Jose, California.
Labor woes have crippled airports in Germany as a one-day strike by workers at 13 of them has caused most flights to be canceled. It's estimated to be affecting more than 500,000 travelers today. Pay is the major issue. Steve Kathan, CBS News.
Do you owe $10,000? From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Republican leaders in the House craft a plan to avoid a government shutdown on Friday, though President Trump says it could happen. Welcome to the fastest show in politics as we count down to the funding deadline on Friday, coming up with the help of Jack Fitzpatrick, Bloomberg Government. He'll join us live from Capitol Hill. As the titans of tech meet today at the White House, we'll name names, get a live report from the North Lawn, and discuss with Bloomberg's Mike Shepard coming up this hour. How have we traded talk of animal spirits for a recession? We'll ask our signature panel. They're both with us today, Rick Davis and Jeannie Shanzano, for the duration. And we start right now on Wall Street with another downdraft and the help of Charlie Pellet. He's got the update on the markets live from world headquarters in New York. Charlie?
And good day from New York, Joe Matthew. It has been described as the falling knife that nobody wants to catch. We have got the Dow, the S&P, NASDAQ, very much in the red right now. In fact, we're making a run for the worst level of the day on the S&P 500 index. Right now, the S&P is down 125. That is a drop of 2.2%. We have got the Dow Jones Industrial Average down 493 points now, down 1.1%, while the NASDAQ Composite Index is down 3.5%. The NASDAQ 100 Index, full of those big tech names, down 3.3%, being led lower by Tesla, which is now down by 10.1%. The NASDAQ 100 Index is now lower by 3.2%. We have got the 10-year at 4.21%, the 2-year 3.91%. Gold is down 0.1%, $29.05 the ounce. West Texas Intermediate crude 66.61 a barrel, down 0.6%. And a rout for Bitcoin back below 80,000, 79,400 on Bitcoin right now. It is down by 4%. So the Dow, the S&P, NASDAQ all in the red. As for the market backdrop, Neil Dutta is head of U.S. economic research at Renaissance Macro Research.
To me, the big story is government spending was already getting worse, particularly state and locals. Housing has been locked up. Labor markets have been locked up. What Trump's doing isn't helping, but those are much bigger considerations, I think, than policy uncertainty.
Neil Dutta of Renaissance Macro Research. Rocket, deal news. Rocket pushing deeper into the property market with a deal to buy Redfin that values the real estate listing firm at $1.75 billion. Rocket down 14% on the news. Redfin, though, surging 69%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Balance of Power continues. Back we go to Washington. Once again, your host. Here he is, Joe Matthew.
All right, Charlie, thank you so much. And it's only Monday. I hope you had a great weekend, and thanks for joining us here. The Monday edition of Balance of Power on Bloomberg Radio. On the satellite radio, channel 121 is your friend. And, of course, YouTube, where you can find us at any moment and our live stream by searching Bloomberg Business News Live. We always keep the light lit for you here in the studio. This market is tough. We'll be back with Charlie, of course, as we are every day throughout the broadcast, to get a sense of just how ugly this might get. Michael Wilson, Morgan Stanley, pointing to 5,500 on the S&P, which means we are not even close right now. The S&P 500, 5642, down over 2%. The NASDAQ, as you heard from Charlie, down 4%. And this must be the period of transition we're talking about, right? Did you see the Donald Trump interview with Sunday Morning Futures? Aren't we clever with the show names? Quote, I hate to predict things like that when asked about whether he was expecting a recession by Maria Bartiromo. There is a period of transition because what we're doing is very big, unquote. Sounds a lot like Scott Bessent last week. We're going to what? Detox the economy, to wean ourselves off of government spending, whatever you want to call it. It's not working for Wall Street. And we're going to keep tabs, of course, on markets for you as we cover the political news here in Washington, with the idea of a government shutdown also hanging over the market here. No one seems to think it's going to happen, and that has a lot to do with some progress that took place over the course of the weekend. They got a deal. I don't think we can call it a clean CR, but it would keep the lights lit through the rest of the year, and we could see a vote as soon as tomorrow. Donald Trump, ahead of this bill's arrival in the Rules Committee, no dissent, says the Post on Truth Social. The House and Senate have put together, he writes, under the circumstances, a very good funding bill, CR in parentheses. All Republicans should vote, please, he says in parentheses. Yes, next week. Great things are coming to America. Skip down a pretty long post here. He says Democrats will do anything they can to shut down our government, and we can't let that happen. We have to remain united, all caps. No dissent, all caps. Fight for another day when the timing is right. And he's got his eyes on reconciliation, of course, as well. Yeah, producer James, I don't know if Tom Massey read the Post. Does anyone think Tom Massey ever votes for any of this stuff? How come he's the one lawmaker who gets away with it? He doesn't get a phone call, right? Maybe he will this week. They need all they can get because apparently Democrats will not take part in this exercise, at least on the House side. The Senate might be different. John Thune needs 8 Democrats. And I'll bet you Jack Fitzpatrick is counting the votes already. He covers appropriations for us. Of course, he's our budget expert at Bloomberg Government. He's already up on the Hill. He's been up there since lawmakers started trickling back into town, and it's great to see you, Jack, with us live now on Balance of Power. What's going to happen in the Rules Committee? Does it sail through, and will it actually pass the House tomorrow?
It doesn't look bad in the Rules Committee. They've gotten the conservative members of the Rules Committee to kind of be team players on the House Republican front. I think tomorrow's vote, assuming the vote does end up being tomorrow, looks close because it's the House of Representatives, and right now everything's close in the House. But again, the conservatives, the kind of firebrand members, Chip Roy even was just tweeting positive things about it. They've largely followed House Republican leadership's vision on how to fund the government. So it doesn't look like you see a lot of defectors from House Republicans. You may pick up some Democrats. And ultimately, if they can get a majority in the House, that puts the pressure on the Senate, in particular Senate Democrats, because they know if you vote against a House-passed funding bill just before a deadline, you're basically voting to shut the government down. So there's a close whip count here, but if they can get it through the House, that puts a lot of leverage in Republicans' hands.
Okay. I mentioned Massey. Jack, you've also got Representatives Tony Gonzalez, Corey Mills, and Brian Fitzpatrick, no relation to Jack. Are these phone calls the president needs to make, or do they kind of one by one fall in line as we get through rules and on our way to the floor?
Those may be the relevant people to keep in mind. I'll be honest with Thomas Massey, when we get ahead of these very close votes, the last time I asked him if he was getting calls from House leadership or the president or something like that, he's made some quips in the past saying, they don't call me, they know it's not worth debating. Massey's a tough get for things he doesn't believe in. But a lot of the Freedom Caucus members, I mentioned Chip Roy, Andy Harris, the chairman of the Freedom Caucus, has been very positive about this plan to avoid a shutdown. They see this as an attempt to take leverage away from Senate Democrats. So that's why you're hearing a lot of members, sans Thomas Massey, kind of play nice on a CR, which is unusual for them.
Yeah, it is. And well, let's talk about what's inside here. Because we heard a lot of talk about a clean CR, Jack, and I don't know that we can call it that. It cuts non-defense discretionary spending by $13 billion from 2024's level, almost 2%. It boosts defense spending by $6 billion. It boosts spending on border enforcement. How would you describe it?
I would describe it as a stopgap measure that runs through the end of the year. And look, Democrats are not going to say it's clean because they don't like it. They don't like the idea of a full year CR anyway. Keep in mind, it's very rare to see a full year CR. In fact, the Department of Defense has never operated on a full year CR. So they made some exceptions and said, we'll take away one of the restrictions that you usually see in a stopgap measure and allow you to start new projects, which is actually very important for the Department of Defense. So it's an unusual set of circumstances. It's not similar to when you hear us reporting about a month-long kick-the-can stopgap. When you take this through the end of the fiscal year, it's very difficult to operate the government on a stopgap measure. So there are some unusual exceptions. However, this is a 99-page bill. If it were a real funding deal, it'd probably be 1,500 pages. So it is relatively clean compared to if they actually had a funding deal. So keep in mind, it's bad for agencies. There are some exceptions. There are some things for Democrats to complain about. But ultimately, this would leave the government kind of running on autopilot through September 30th.
Yeah, that's right, autopilot. Although, is the $6 billion in extra spending for defense enough to quiet the Pentagon hawks? Because that was going to be one of the major hurdles this thing had to clear.
Largely, they seem okay with this, and I think that's based on discussions about just continuing actual appropriations talks. You can enact a full-year continuing resolution, just keeping everything running on the previous year's budget, and then keep negotiating and say, notwithstanding that CR, we now can enact a defense appropriations bill with the necessary increases. That's not easy to get that momentum going when you've taken away the deadline. But it doesn't sound like there's a revolt from the defense hawks, from the appropriations committee's members, because at least they can continue those conversations. Whether it's realistic that they get a full deal, I don't know, but they're not revolting.
Well, I'll tell you what, for our viewers and listeners here in Washington, those on 99.1 hearing right now, there's apparently a memo out from the mayor of D.C. talking about draconian cuts. Muriel Bowser warning of devastating impacts to critical services, potential layoffs and furloughs of teachers, police officers, and other frontline workers, as this basically cancels the city's budget, cuts it by $1 billion, Jack. Does she have any recourse?
She doesn't have much recourse, and she doesn't have a lot of friendly ears in Congress right now because congressional Republicans, especially in the House, have just been very negative towards the government of the District of Columbia. It is certainly fair for her to point out that if you keep things running on autopilot, agencies that need an increase are either going to have to furlough workers or come up with something to address the shortcoming one way or another. That is one of many examples of government organizations, including many federal agencies, that would face very difficult decisions if the government is funded on a stopgap measure through September 30th.
Right. Yeah, this is a pretty dramatic escalation of federal power over the city here, canceling a $21 billion budget. Jack, great work, and thank you so much for stopping down for us today as he makes the rounds on Capitol Hill. We're counting down to midnight Friday, and we'll see if we can get this done. Rules Committee today, looks like House floor tomorrow if the Speaker gets his wishes, then it moves on to the Senate. I'm Joe Matthew in Washington. Thanks for being with us here. Mike Shepard's on the way in as the Titans of Tech gather at the White House. This is Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got a tech-led sell-off. Stocks are declining with the Dow, the S&P, NASDAQ very much in the red right now. Right to the numbers here with the S&P trading lower by 130 points, 56.39 where we stand, down 2.3%. Dow Industrials down 550 now, down 1.3%. NASDAQ down 652, a decline of 3.6%. 10-year 4.21%, the 2-year 3.91%. Gold down $5 the ounce, $29.03, down 0.2%. West Texas Intermediate crude down 1%, 66.35 a barrel. And Bitcoin now at 79,475. Bitcoin down by 4.3%. BioNTech expects sales to fall again this year as the German biotech continues to work to bring its experimental cancer drugs to market. The drug maker, you recall, shot to fame during the COVID-19 crisis when it developed a vaccine with Pfizer. Also making news, Novo Nordisk. It is plunging the most since December after another disappointment for the drug maker's next-generation weight loss shot, Agrisema. Right now, we have got shares of Novo Nordisk down by 8.3%. BioNTech, by the way, down 2.7%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. And Balance of Power continues now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, thank you so much. A brutal market today. We'll see where we end the week here. Of course, everybody's upset about the idea of a possible recession after President Trump was asked about this over the weekend. Didn't rule it out. Also didn't rule out a government shutdown, which I think, as we just established with Jack Fitzpatrick, is pretty unlikely to happen on Friday. They seem to have a plan to keep the lights on. Nothing guaranteed, of course. But the question surrounding tariffs and exactly what will be the policy of this White House continues to dog the market, even as the White House embraces tech again today. If you look at the guidance from 1600 Pennsylvania Avenue, 2 p.m. Eastern Time, about 90 from now, the president holds a roundtable with Technology CEO Council. It's going to be in the Roosevelt Room. Why don't I think legacy tech, trying to be fair and kind here. Jensen Huang won't be among them. I don't think Sam Altman will either. We've got CEOs. We'll let Tyler tell us, but this is Intel, Hewlett-Packard, IBM. Okay, they're going to be talking about trade policy, tariffs. What are the impact of tariffs potentially, and moving manufacturing here to the U.S. Bloomberg's Tyler Kendall has been on the North Lawn of the White House since before the sun came up this morning. Tyler, I look back on a day when ending daylight savings time was the most controversial position of the Doge. Things have changed so much since then. Bring us inside the tent and what we're doing with tech today at the White House, Tyler Kendall.
Yeah, hey, Joe. Well, you named it there. Our reporting indicating that executives from companies like Intel, HP, Qualcomm, and IBM will be here at the White House for that 2 p.m. Eastern meeting when President Trump convenes his Technology CEO Council. Now, according to a statement obtained by Bloomberg News, HP previewed that tariffs and trade policy, as well as boosting U.S. domestic manufacturing, will be top of the agenda list. And that's because many of these companies are seeking clarity when it comes to potential tightening in export controls, for example, as well as what tariffs will mean for their industries more broadly and whether or not carve-outs could be on the table here. Because, Joe, it comes against this backdrop that the White House is really taking more of a stick versus a carrot approach when it comes to tech companies and chip makers in recent weeks. Just look at last week, for example. As you're about to hear, President Trump called on Congress to repeal funding under the CHIPS and Science Act, saying that tariffs would be a better way to fuel investment in the U.S. instead of the subsidies and the incentives that the CHIPS and Science Act has so far provided.
Your CHIPS Act is a horrible, horrible thing. We give hundreds of billions of dollars, and it doesn't mean a thing. They take our money and they don't spend it. All that meant to them, we're giving them no money. All that was important to them was they didn't want to pay the tariffs, so they came and they're building, and many other companies are coming. We don't have to give them money.
Well, our reporting indicates, Joe, that Republicans aren't necessarily on board with this idea, or at least not on board with it yet. Remember, of course, the CHIPS and Science Act, a $53 billion plan that had 17 Senate Republicans vote in favor of it, considered to have very widespread bipartisan support. Many Republicans in Congress saying that they were caught off guard by President Trump's announcement last week during his address to a joint session of Congress. So for now, it appears that the funding is likely safe, as Congress has this whole other slew of agenda items that they'd like to get to first.
You said it. Just quickly, Tyler, do we expect to hear from these executives? Do you have the stakeout microphone set up in the driveway, or are they going to sneak out the side door on us?
Well, I'm hoping to try to get them as they come in through the visitor's entrance, so we'll have to see, although I don't know if me previewing right now might mean that they're a little more on guard ahead of time. But we'll be trying to ask them today big questions about what they have spoken about with this administration when it potentially comes to carve-outs, but also specifics when it comes to their U.S. manufacturing plans. They want to up jobs in the U.S. President Trump wants to see those tangible numbers put forward. But when it comes to these four companies, at least, we're still waiting for a little more clarity on what their plans will be going forward and whether it will be enough for this White House.
They're all huddled around YouTube watching you right now, Tyler. They'll never know what hit them.
So.
Thank you, as always. Tyler Kendall on the north lawn of the White House. It's beautiful out today in Washington. Before you know it, there'll be cherry blossoms behind Tyler as we speak. Mike Shepard was writing about this last week, by the way. If you were on the terminal, if you were on the website, you knew that these techs were coming to, these tech executives, I should say, were coming to town. As I mentioned, Intel, IBM, Qualcomm, too, I might not have mentioned, and a great opportunity to spend some time with Bloomberg's senior editor for technology and strategic industries. Great to see Shep, always on Balance of Power. So, interesting collection. Why these guys? We're so used to Larry Ellison, Jensen Huang, Sam Altman. This is kind of like the 90s are calling.
In a way, you don't want to make it seem like the other guys when you think about the other major technology CEOs who've really made themselves part of Trump's orbit, starting, of course, with Elon Musk, but then there's Jeff Bezos, Mark Zuckerberg, and you mentioned Larry Ellison from Oracle, and then Masayoshi Son from SoftBank, who has, shown up at the White House and also at Mar-a-Lago to talk about investment plans. But we haven't heard as much from the likes of HP and Qualcomm and Intel about what their intentions are. And it's not even clear that this meeting today is framed as sort of an investment announcement. It may be more just a chance for the president to check the pulse of this industry and different members of this industry too. More of the hardware makers, more of the companies that are out there trying to produce stuff here and elsewhere and trying to navigate those tariffs that Tyler was just talking about.
The president said last week in his address to Congress, CHIPS Act is dead. I suspect they have some questions about that.
They may have some questions, especially Intel, because Intel was the largest recipient of grants and other support through the CHIPS Act. It reached a significant agreement with the prior administration on what it would receive. It's a signed contract. The money has not all been dispersed pending Intel's ability to meet certain benchmarks. It's unclear right now whether the new Commerce Secretary, Howard Lutnick, will be completely aboard with how the progress is going. I will say that, based on our reporting last week that Tyler mentioned, lawmakers are really not aboard at all with this idea of repealing the CHIPS Act. They like money going out to their states and districts, and there are a number of Republican locales that are getting money via the CHIPS Act for projects and plants and research and development in their states. And yet we are not exactly seeing all the benefits from the CHIPS Act for companies like Intel, which, as you've been following along with me, has struggled over the past year, especially since September. They have yet to show true progress, even with some of the support that has been promised to it, struggling to come up with customers. And they've also put in mothballs for now construction on that big plant in Ohio.
That's why you wonder what's going to happen to that Ohio contract, right? I have to ask you, we mentioned Larry Ellison, and of course his Oracle is going to be reporting quarterly results after the bell. Will there be insights into Stargate, into this new alliance with the White House and with OpenAI when we hear this conference call later?
Well, that's a great question, Joe, and I think people are looking for more signals about where the administration is going with its policy on AI. They are about halfway through this 120-day period that Trump gave his top advisor on AI, David Sachs, to come up with plans for not only AI, but also crypto, but especially in this front, which direction will they go? And they're signaling, though, that it will be very different from the preceding administration, and that is fewer regulations, hit the gas on construction of data centers, and trying to forge a new path that will promote AI and ensure U.S. dominance. But there are some challenges out there, the likes of DeepSeek and others from China, namely. And there are also questions about whether all this spending is bearing fruit in terms of a game-changing application.
Well, realizing the markets are lower already, there does seem to be some skepticism. Oracle shares are down 4% right now and back below $150. It's a tough day for the market here. Everyone's keying off of every word the president says, the Commerce Secretary, the Treasury Secretary, and that goes for TikTok as well. We actually heard about the bidding and 4 parties apparently in line for TikTok. What do you hear?
Apparently, well, it is unclear which 4 parties the president was talking about when he spoke about it yesterday aboard Air Force One. And does he mean the handful that we're sort of aware of? Project Liberty, that features real estate investor Frank McCourt, and Shark Tank's Kevin O'Leary. They have one offer that they say has been on the table. There is another one purportedly coming from Mr. Beast and other investors. But what are some of these other
Is Mnuchin still part of this at all?
Unclear. Unclear. And, you know, when he's talking about 4 offers, how serious are they? And what does the offer exactly entail? Does it mean a full-on sale, full stop, disconnection from ByteDance, American owner of U.S. operations of TikTok? Remember, ByteDance has said, no way. We are not selling. TikTok is too lucrative, and also the Chinese government gets a say in this too, because there is the algorithm as well that's also involved in this. And TikTok doesn't work that well without the algorithm, and recreating it will be a big challenge for any buyer that doesn't come away without it.
Wow. What's the timeline on this? Does he have all the time he needs, or will there be another extension while this is working?
It's about another month, but then the question comes up, will they need more time? This will be a complex deal requiring a lot of approvals, not only here, and it does sound like we will see some sort of extension. Trump floated that last week on Thursday as a possibility, but it is unclear what's going on behind closed doors at the White House. But then among all these investors too, how are they going to package something that manages to satisfy all these conditions?
And as we keep laying on more tariffs, I don't think Beijing is feeling better about selling this than it was before,
definitely not. It becomes sort of that bargaining chip between the world's 2 largest economies. And really, as you brought up tariffs, that is the other thing that is weighing on the markets and will no doubt be a topic of the conversation when those tech CEOs
Could that unlock a deal? Hey, we'll lift the tariffs if you sell us TikTok. Mike Shepard, is that our next story here?
That would be a big trade-off, maybe too big for Donald Trump to make right now.
Boy, I don't think you're really going to write that story, but keep us honest on this, because it's the story that's never going to go away. Thanks to Michael Shepard. We have a sense of what's going on here. I'm Joe Matthew in Washington. Thank you, Mike. We'll have much more ahead with our signature panel. Jeannie Shanzano and Rick Davis start the week early with us. We've got a lot to talk about coming off the weekend. The meeting of tech CEOs today, and a stock market that can't seem to drop fast enough. Much more on that right here on the fastest show in politics. This is Balance of Power, only on Bloomberg.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ 100 index, and the Russell 2000 index, all very much in the red right now. S&P 500 index just about lows of the session, right to the numbers, with the S&P down 132 now, down 2.3%. Dow Industrials down 541 on the Dow, a decline right now of 1.3%. NASDAQ lower by 3.6%. Tech being hit especially hard today. The NASDAQ 100 index down 3.4%, and the Russell 2000 index of small cap shares down 1.6%. We've got the 10-year currently yielding 4.22%, with the 2-year 3.92%. Spot gold down $7 the ounce, holding above 2,900, 29.02 right now, down 0.2%. And Bitcoin at 79,250 on Bitcoin, down by 4.6%. Inflation data topped this week's U.S. economic calendar, and with a look ahead, here's Bloomberg's Vinny Del Giudice.
The U.S. Consumer Price Index is due Wednesday and the Producer Price Index Thursday. Economists don't see much relief. Inflation remains stubborn and tariffs won't help. And grocery prices, eggs in particular. America's flock of hens is down as avian influenza rages, the fewest egg-laying birds in almost a decade. At the diner, they're even charging extra for eggs. Time to eat more grits. Vinny Del Giudice, Bloomberg Radio.
Apple shares now down by 5.6%, all part of a broader tech sell-off. The iPhone maker seeing its biggest intraday drop in more than a month. Company recently said it was delaying an AI-related update to the Siri digital assistant for the foreseeable future. Again, Apple shares right now down 5.7%. S&P just about the lows of the session, recapping down now by 2.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Back we go to Washington. Once again, your host. Here he is, Joe Matthew.
All right, Charlie. Boy, the bearer of bad news today. The great Charlie Pellet, the voice of Wall Street, and incidentally, the New York subway, live in New York. And we'll get back to Charlie top of the hour and see what the heck's going on. The VIX up 15% today. That's how we're feeling. Look at Bitcoin. Even Bitcoin is getting crushed. Now we're below $80,000 here. Look at this. 5% loss for Bitcoin. As I mentioned, what is up? The VIX. And of course, all of this has to do with tariffs and rhetoric. Go back to Saturday and Scott Bessent talking about the detoxing the economy. We heard about short-term pain, right, at the not State of the Union address last week, the address to a joint session of Congress. But then there was the big one, the big doozy with Maria Bartiromo. President Trump is asked straight out, because we've traded our animal spirits here for talk of recession. What do you think, Mr. President? Are you expecting a recession this year? Here's what he said.
I hate to predict things like that. There is a period of transition because what we're doing is very big. We're bringing wealth back to America. That's a big thing. And there are always periods of, it takes a little time. It takes a little time.
You couldn't say no? We assemble our panel now, our signature panel with us on this Monday. Jeannie Shanzano is here, our Democratic analyst, Bloomberg Politics contributor, of course, senior democracy fellow with the Center for the Study of the Presidency and Congress. And there's Republican strategist Rick Davis, Bloomberg Politics contributor and partner at Stone Court Capital. Rick, was that Donald Trump being off-brand there? Howard Lutnick had to go on TV later on and say, absolutely not, we're not going to have a recession. What happened to talking up the economy? Which Donald Trump was that?
Yeah, that was the dark Donald Trump. You remember Dark Brandon? Well, we're going to have a new nickname for Dark Trump. You know, his eyes turned a little bit red and glowed when he said that. And I thought, wow, here's an administration that doesn't mind leaning into a recession. I mean, Joe Biden was excoriated for denying that there could be a recession or that there was inflation. And here we got an administration that, you know, is kind of predicting a downfall in the economy. And I must admit, I didn't hear it from Kevin Hassett, chief economic advisor. I didn't hear it from Howard Lutnick. I didn't hear it from Scott Bessent. So maybe Donald Trump is on the wrong page. I hope so, because certainly a recession is not what we bought into when we elected Donald Trump president.
Well, no, boy, things have changed awfully quick here, Jeannie. The market is back to where it was before the election, and we're talking about whether we're going to have a recession or not. There's something called talking down the economy, right? Is Donald Trump going to make it worse with rhetoric like that?
Today is probably suggests that he is making it a little worse, but it's hard to tell. I think my read of this is Donald Trump is doing something we've seen all modern presidents do, is they try to walk back the inflated expectations that got them into office. And so with Donald Trump, it was make America affordable again. Now, all of a sudden, as the numbers, it's just been 7 weeks, have shown that may not be coming quite as quickly as he promised. He wants to lower those expectations. And so when he talks to Maria Bartiromo or anybody else, he says, to your point, at the State of the Union even, there might be some pain here. You might experience pain, but there is something great waiting in the aftermath. We don't quite know what that is. We hope it's a good economy, a strong economy, jobs, manufacturing. But this is, I think, part and parcel of the way we have laid out the modern presidency. To win, you have to overpromise. And when you get into office, delivering on those promises is difficult. You let supporters down. And of course, many of his supporters are in the stock market. They wanted a lot more from this president, and he promised it quickly. And that is not something that Washington can deliver, even under Donald Trump.
Well, as we mentioned, grabbing the fire hose, running towards the smoke. Commerce Secretary Howard Lutnick on Meet the Press yesterday morning. Are we going to have a recession, Mr. Secretary?
There's going to be no recession in America. What there's going to be is global tariffs are going to come down because President Trump has said, you want to charge us 100%? We're going to charge you 100%. And you know what they say? They say, no, don't charge us 100%. We'll bring ours down. So Donald Trump is bringing growth to America. I would never bet on recession. No chance.
Well, Rick Davis, it looks like Wall Street kind of is. I don't know if we can go that far, but we're looking at a pronounced sell-off here again today. The NASDAQ, even as tech CEOs arrive at the White House, is down over 3%, over 3.5%. You've got Mike Wilson at Morgan Stanley calling the bottom 5,500, he says, for the S&P 500. How do we rationalize all of this?
Yeah, well, I hope Howard Lutnick is right, but maybe what he's missing is while our stock markets are going down the floorboards and giving back every gain that we had prior to Donald Trump being president, the rest of the world seems to be enjoying an uplift in the economy. I mean, Donald Trump should be the savior of Europe. I mean, you mentioned the VIX being up today. I mean, all of a sudden, Europe's the place to invest, not because they're doing that much better. It's because we're doing that much worse. We do have to remember, Donald Trump inherited a robust economy. I heard some of his people on the weekend shows talking about what a horrible economy they got. They didn't get a horrible economy. They got a great economy. We had people on this show saying this might be the best economy we've had in our current lifetime. And I would agree. I'm no economist, but from what I could tell, every indicator in the economy was up at the end of this last year. And now they're looking at a totally different scenario. Donald Trump was kind of, talking about that in his own comments, but nobody else in his administration will echo that. So I don't know. I mean, I think the rest of the world has ought to send a gift to the White House thanking Donald Trump for starting a tariff war that is actually helping them, not hurting the rest of the world like Lutnick is saying.
He also helped to save Justin Trudeau's party and may well in the coming elections here with our new prime minister over the weekend. Jeannie, I'll get hit for saying this, but I've got to ask it. How long until we see the first billboard with Joe Biden's face on it saying, "Miss me yet"?
I'm thinking that may be a little while, but we'll have to wait and see. If we don't see if we don't get out of the red pretty soon, it might come sooner than I think. But, another really interesting thing that Donald Trump said over the weekend was he compared how China operates to how the U.S. operates in terms of planning. And he is right on this. They work on 100-year cycles. We go quarter to quarter. This speaks to an enormous structural problem in the way we plan and the way Washington, D.C. operates. So when somebody like Donald Trump is elected to do something very revolutionary and to do it in a way that most economists see as not being particularly friendly by way of inflation in terms of using tariffs, that's a long investment that you have to make. And he knows that, which is why he is now saying what he needs is time. Unfortunately for Donald Trump, he can't get it in the way our political and economic system works in the US. And that is a source of real frustration, not just for him, but for all presidents. So in a lot of ways, this story is much, much bigger than anything about Donald Trump or Joe Biden. He simply does not have the time, and he is a lame duck president to do the big things he wants to do. So now it is a waiting game to see when he decides he's going to cut and run from his promises and try to just make sure he can hand over an economy in good condition. And that is a sad reality that his fervent supporters are going to have to accept. All of those big promises, very difficult for a president to deliver on. And he knows that, and that's why he's trying to ask for time.
Well, it's another down day for the markets here. It's another sharply lower day, Rick, for Goldman Sachs, down 5% right now. Again, round-tripping to where we were before the election. Goldman Sachs is at $532. It topped out above $670 following the election and the inauguration. Rick, we talked about animal spirits. It was going to be M&A time. The party was back on. Now that we're seeing the market reaction that we are seeing, and to the extent that you're involved in the private equity space, what are you hearing? And could this maybe actually help private equity at some point when so many people are trying to get out of the public markets?
Yeah, look, I mean, it's too soon to tell. You're right. I think everybody was excited about this idea that we're going to reduce the regulation coming out of the Justice Department and out of the SEC, and it would unleash deal making to the scale that we haven't seen in a long time. Public issuances would be way up. And I would say part of what is being informed in investment right now is just the lack of certainty. When you deploy capital, you want some certainty in the economic situation, both here and abroad, depending upon what kind of investment you make. And we have anything but that. The on again, off again tariff regimes, the tax code that is going to be redone. And, are we going to get just the tax cuts that Donald Trump put into effect in 2017, or are there going to be a slew of these new things? What's that going to do with the budget? Are we going to increase the debt? I'd say that it's been head spinning in this administration. If they had come out and just said, here's what we're going to do, here's the regime, we're going to do these reciprocal tariffs, and as they come down, everybody will create some growth. But it's been anything but that. It's been tariffs on today. We're going to give exemptions. Who knows what's going to happen today in the tech meeting? You'd love to be able to invest with the knowledge that tech's going to be supported by the government like it was in the previous administration, but now we're going to get rid of the CHIPS Act. Half that $50 billion is already deployed. So what are we really talking about cutting? I mean, the conflicting messages in this administration puts a pall on investment.
Boy, Rick just said a lot. Jeannie, do Democrats need to start talking about the stock market more after Joe Biden distanced himself from it for 4 years?
I think they absolutely should. And I think that is something that has been missing from the Democrats' messaging and from their ability to speak to people where they live. There is a sort of a positive way to look at what's happening. And I would just raise this. When we saw Goldman Sachs talk about the recession chances raised from 15 to 20% the other day, that's not a huge jump. And part of the reason is probably that this is a self-inflicted wound, that the president could abort this mission, if you will, and he could change the policy. It is his policy that is driving this concern and the whiplash that Rick was just rightly discussing. So if the White House could pull that back to a certain extent, if Donald Trump was willing to, maybe consider or reconsider, if you will, his commitment to tariffs and the whiplash tariff policies we've been feeling, then that may allow people to feel that certainty, and that may have a positive impact. So that's both the positive aspect and the frustrating aspect of this. It is a self-inflicted wound based on the 7 weeks we have experienced that may change.
Yeah. Ginny Shanzano and Rick Davis looking at politics through the prism of Wall Street today on the fastest show in politics. They'll be with us in hour 2 as we welcome our global television audience. We'll also welcome Congressman Chuck Fleischman, the Republican from Tennessee, will join alongside Don Beyer, the Democrat from Virginia. It's all coming.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
They have 4 days to figure it out. Welcome to the fastest show in politics as Republican leaders in the House craft a plan to avoid a government shutdown on Friday. But they don't have the votes yet. I'm Joe Matthew alongside Kaylee Lyons in Washington. Thanks for joining us on the early edition of Balance of Power on this Monday. A new week at hand. Donald Trump, Kaylee, is calling for no dissent.
Yes.
But he still has some minds to change, I think.
Well, yeah, certainly you need to be able to convince everybody, barring one vote, maybe two Republicans in the House Republican Conference. And then you have to convince a bunch of Senate Democrats to pass this thing in the upper chamber, assuming that it can get through the House. Add on to all of that, the risk of a shutdown, usually largely not paid attention to by financial markets, perhaps one that is going to be heightened, given the volatility we are seeing and that markets do seem to be feeling incredibly pessimistic at the moment. We're down at the lows of the session right now in both the S&P 500, the NASDAQ 100 down almost 3.5%.
Pretty remarkable. The VIX is up 14%. Crypto is not doing well either. I don't know about Bitcoin as a safe haven. It's now below $79,000. Mike Wilson, you see at Morgan Stanley, says 5,500 on the S&P 500. If that's true, if he's right this time, we got a lot more way to go.
Yeah, as there's concern out there about tariffs and growth, and the president not necessarily putting those growth concerns to bed with not directly answering a question about a recession on Sunday morning television, instead talking about the economy in transition.
Wouldn't rule out a recession or a government shutdown in that same conversation. Pretty interesting.
Indeed. So we're going to get the latest from Capitol Hill in just a moment, but we have to begin with this market action because it really is incredible today. Charlie Pellet has the latest from New York. Charlie?
Hi, thank you very much, Kaylee Lyons. Indeed, the selling continues from last week. Last week, you recall the S&P 500 index on the week down 3.1%. Right now, we have got the Dow, the S&P, NASDAQ very much in the red with the S&P at 5,600, down 134 points now, down 2.3%. Dow Jones Industrial Average slumping 570, down 1.3%. But the real damage among tech stocks, with NASDAQ down 668 now. For NASDAQ, a decline of 3.7%. The NASDAQ 100 index down 3.4%. Certainly big tech weighing heavily on trading amid a rotation into defensive shares. Speculation is also intensifying that President Trump is willing to tolerate hardship in the economy and markets in pursuit of long-term goals involving tariffs and smaller government. The 10-year, 4.23%, with a 2-year that's currently yielding 3.92%. Gold is down 0.5%, $28.94 the ounce, and West Texas Intermediate crude down 1%, $67.38 on WTI. Bitcoin, as Joe mentioned, now trading below 79,000, 78,980 on Bitcoin, down now by almost 5%. Corporate news, Rocket is pushing deeper into the property market with a deal to buy Redfin that values the real estate listing site at $1.75 billion. Right now, we have got Rocket down 17.6%, but Redfin shares, they're surging 63%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And Balance of Power continues right now. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet in New York, thank you so much. We'll be checking in with Charlie throughout the hour here on Bloomberg TV and radio as we keep tabs on the dramatic action he just ran us through in financial markets. Again, a brutal day for equities, a bid into the bond market as concern is out there about growth, specifically the impact of this administration's policies and what that could ultimately mean for the economic outlook, of course, with a lot of uncertainty out there around those policies, and uncertainty, too, about another factor, which is whether or not the federal government is going to be able to stay open beyond midnight Friday. Over the weekend, House Republicans finally released the text of a spending bill that would seek to avoid a shutdown, keep the government funded through the end of September. That's the end of the fiscal year. The problem is, Joe, with an incredibly tight majority in the House and the necessity of getting Democratic votes in the Senate, it's an uphill climb to actually get this thing passed.
They technically don't have the votes, so they'll have a much better sense of what happens after it goes through the Rules Committee today, assuming that does happen. Kaylee, Speaker wants to see a floor vote tomorrow, which is pretty aggressive considering the fact this just came together over the weekend. Lowers non-defense discretionary spending by $13 billion from the year earlier, about 2%. Boosting defense spending by about $6 billion. It has more money for the border as well. So he's trying to make a lot of parties happy here with one bill.
But that makes it not necessarily a clean continuing resolution, as some were
That's what we thought we were going to need to get everyone to vote yes. Of course, Donald Trump is on board endorsing this with a no dissent post on Truth Social. The president acknowledging that a shutdown could happen in conversation on Sunday, but taking to Truth Social to apply Republican members saying we have to remain united. Kaylee, no dissent, fight for another day when the timing is right. Mike Dorning has been through a couple of these. This would be our first shutdown since 2019. Is that correct? Did I read that? It's actually, considering how many close calls we've had, it's been a pretty long time, and I don't think anyone really sees a shutdown taking place this time either. The question is, will there have to be an even shorter term stopgap to pass the stopgap for the rest of the year?
Exactly. There's very low chance. I was speaking with one of our congressional reporters, and he put it at 5% chance of an actual shutdown that lasts more than a few hours this weekend. They'll either pass this or they'll come up with a way to punt it down the road. And the reason why we think that is because neither side really wants a shutdown. They may be unable to agree on this solution, on this funding level, but neither one is really gunning to shut down the government.
Well, and that includes Democrats in the Senate, right? They face potentially the most difficult decision of all this week, because if the House does vote and pass this tomorrow, it's going to put them in quite a jam if the House gets out of town and leaves them no option to revise this thing.
Well, if the Senate passes a temporary measure and the House won't come back, that might look bad for the House. So it's possible that even if they get on their planes and go home on Tuesday, they might have to come back on Friday. But you can see, for instance, Senator Fetterman from Pennsylvania last Friday was saying, hey, we don't want to shut down the government. So there's a reasonable number of Democratic senators who just don't want the government to shut down. That makes you think that there's going to be some way of avoiding the shutdown. Whether this will fly, where they've basically given the Democrats nothing at all, cut domestic spending, and they only have like 2 Republicans they can lose on the Republican side. Whether that will fly or not totally clear.
Fascinating. We know that Tom Massey is a no and probably stays a no. He seems to have his own orbit where everyone understands that he's never going to vote for a continuing resolution. But then there's Tony Gonzalez, Brian Fitzpatrick, Corey Mills. Are these phone calls that Donald Trump makes, or do they just fall in line over the course of...
Well, last time, when it was up against it, Massey was the only one who would stand up to Trump and say, no, I'm not going to do it. So you get a sense that Trump can lean on these people. He's already said no dissent from Republicans on this. He can get on the phone with people and maybe ratchet up the pressure on them some more. So that's something we'll see. But the track record is whenever Trump tells Republicans no dissent, they're pretty much fall into line.
So assuming this can get done and the can effectively gets kicked to the end of the fiscal year, September 30th, it becomes a question around the next year's funding and budget reconciliation and that whole song and dance. How quickly will they be able to move on to that actual work of getting budget reconciliation done if they can do that this week? Do they start writing that bill next week?
They could start working on it. Now all the individual, the way they've structured this is all the individual committee chairs have to figure out what to cut. That's not likely to happen overnight, but they're already thinking about that, and they can start focusing on it more once this is passed. And whether it's this continuing resolution or they kick it down the can down the road a week and come up with something slightly different, you can pretty much figure this will get resolved soon.
All right. One bridge crossed at a time, I suppose. Mike Dorning, who helps lead our congressional coverage on our Capitol Influence team here in Washington. Thank you so much. And it is to Capitol Hill that we go next. I'm pleased to say joining us here on Balance of Power is Republican Congressman Chuck Fleischmann of Tennessee, representing the 3rd District. Welcome back to Bloomberg TV and Radio, Congressman. Appreciate your patience today. Obviously, a big week for you and your colleagues. As President Trump is saying no dissent on this package, do you expect we will see some dissent in the Republican conference?
Very little, maybe one. I'm an appropriator. I'm very, very pleased with the final work product. Obviously, I would have preferred a budget. I've worked on a budget on the energy and water bill now for months. We've had 2 continuing resolutions, but I think we'll see very little dissent. There's no appetite out there, and there should never be appetite to shut the federal government down. It costs more money to reopen. It hurts people. It puts our nation at risk. So I sincerely believe that we will pass this CR and that the Senate will take it up and pass it as well.
Congressman, it's good to see you, and welcome back to Bloomberg. I know you're sensitive to the financial markets, and we're watching Wall Street tumble here once again today. Following the president's remarks over the weekend, he would not rule out a recession. He also would not rule out a government shutdown when asked about that on Air Force One. And there are great concerns about what the administration's tariff policy is going to mean for financial markets. The losses cannot be ignored. We're back to where we were before the election, Congressman. Does Wall Street have this wrong, or does the president need to say something to stabilize markets?
The president is stabilizing the country, and as part of that, we do need to stabilize markets. But let's face it, Wall Street reacts, and I'm very cognizant of what Wall Street looks at every day. But the financial health, short-term and long-term, of this country will be infinitely better with Donald Trump at the helm. I think Wall Street gets that, but there are daily ups and downs, and we're sensitive to that. We want to make sure that we keep inflation low, that we keep unemployment low, that we keep the country moving forward. But the reality is there are so many things that have accumulated over the years, bad trade deals, other things that are just baked in, that we have got to ferret out and fix for the long-term health. Donald Trump's the best person to do that. I think he's one of a kind. Ultimately, the country will do well and Wall Street will respond.
And if recession is the price to pay for a reset of the economy, Congressman, is that justified?
Well, I don't necessarily concede that we're going to have a recession. There are always ebbs and flows. The administration has a role, Congress has a role, the Federal Reserve has a role. And let's face it, it's an international global economy. No one factor would predominate in causing a recession or curing a recession. I do think strong fiscal policies, keeping tax rates low, keeping regulations low are going to, and of course, what I do, keeping energy abundant in America. I'm the energy congressperson. I chair Energy and Water in the House. Once we put all these pieces together, I think we're going to see an unprecedented growth in America like we've never seen before. So sit tight, hold tight for the midterm and the long run, and we're going to be in great shape.
Crude oil prices are lower today as well. Congressman, West Texas crude is trading around $66 a barrel here. You start talking about recession, and you know that energy prices are going to start dropping, not to be confused with drill, baby, drill. How does this administration compel energy producers to continue producing in the face of lower prices?
Well, the best part about it is the United States, under President Trump the first time, I actually voted for it, became an exporter of oil for the first time in decades. We can export natural gas. Biden's artificial constraints on that he really didn't realize that he did when asked by the Speaker of the House. What we've got to do in this country is realize we have abundant natural resources, oil, natural gas, minerals, and the like. We take that abundance, that wealth, that resource, use it internally and export it as well. It will help create better trade relations and the like. Let's face it, it's supply and demand. You're right. If there is a recession, slight or otherwise, demand for energy will go down, but ultimately it always bounces back. What I look at is the big picture. I know this, America's demand and the world's demand for energy is booming. We cannot stay static, so we need our fossil fuels, oil and gas. I occupy the nuclear sector. I'm so glad that our new Secretary of Energy is pro-nuclear. We're going to work on that. But I want to see abundant American energy. I chair the American Dominance in Energy Caucus. So let's get supply out there, and demand will take care of itself.
On the subject of energy, Congressman, effective today, Ontario, the province in Canada, has announced a 25% surcharge on electricity exports to 3 U.S. states. This is part of retaliation for the tariffs on Canada that President Trump has, of course, put into place and pulled back a few times now. Should energy be exempt from whatever trade or tariff-oriented negotiations over fentanyl and the border this administration is having with what will be the Mark Carney government now that he's been tapped as the next prime minister? Do you worry about the role energy is playing in this fight, not just when it comes to U.S. and Canada, but you could look at retaliatory tariffs China has placed on U.S. LNG as well?
Well, I'm going to leave that to the administration to decide. And I trust them as they implement tariffs, they will use them. Many countries have backed off already. Other countries want to negotiate. Canada is our friend, but we've had disadvantageous trade agreements with them for quite some time. That needs to be resolved, just like it does in Mexico. The arrangement with Mexico is maybe not as amicable as it is with our friends in the north, but we have got to make sure, whether it's Canada, Mexico, or any other country, including China, that we don't continue to get beat at the table. Because when we continue to lose, we have to have an equalizer. Donald Trump is not only an equalizer, he's a winner at this game. So it's a process that has started. It's a process that's long overdue. And I think it's a process that ultimately Donald Trump and the American people will win.
Looking at the stock market and specifically the S&P 500 in real time as we speak, Congressman, we're going back to October. We may be back in September by the time the day is done here. I know that you're deferring to the administration when it comes to tariff policy and a number of other issues, including energy, that we're talking about. But is there a line in which we need to reconsider the way this is being communicated to the markets? Is there a point at which the S&P 500 will fall and the communications department at the White House and maybe lawmakers on Capitol Hill need to start addressing this in a different way?
Well, I hearken back to the wonderful days of Ronald Reagan, and I remember voting for Reagan in 1980. In 1982, naysayers were saying, oh my gosh, the sky is falling. They called it the Reagan recession, but he said, hold fast and hold tight, better days will come. And we literally had decades of great growth in this country, in our economy. The middle class boomed, people came out of poverty. It was a great time for America. I think we're going to see something very
Ronald
similar.
Reagan also had a real allergy to tariffs, Congressman.
Yeah, yes, he did. But he was not one who would shy away from the fight when the fight had to happen. When we had a situation that we do now, Donald Trump had to look at the entire world taking advantage of the United States, where some people in the United States, including some in my party, said, well, we prefer the cheap goods. The cheap goods were at the benefit of the American nation. And right now, we've got to equalize that. I fervently believe that Donald Trump will see this through. He will not only macromanage this, he will micromanage this, and he will use that to gain other benefits, fentanyl, and better international relations with our good trade partners. I think the day of taking advantage of the United States is over, and I think Donald Trump is in the best position to preside over that. To answer your question, ultimately, Wall Street will be fine because Main Street America will be fine, and we're going to see abundant growth. Lower regulations, we're going to see less deficits, we're going to see a situation where we get those tax cuts back in place. The things that are going to drive our great economy will be done better under this administration and with Republicans in control.
Congressman Chuck Fleischmann, the Republican from Tennessee's 3rd District. Congressman, thank you for the insights as we watch Wall Street today with our eyes on politics here in Washington. He's back in town for a vote as soon as tomorrow on the CR we've been talking about. Our panel's up next here on Bloomberg.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. Just about the worst level of the day right now. We are looking at a 640-point drop on the Dow Jones Industrial Average, down 1.5%. S&P 500 index now falling by 136 points. That is a decline of 2.4%. We've got the Nasdaq Composite Index down 686 points on Nasdaq, down 3.8%. Nasdaq 100 Index down 3.5%. And our Mike Regan will have a whole lot more on the equity market coming up in just a moment. I'll ask about Bitcoin, because right now we got Bitcoin down by 4.8%, just above 79,070 right now on Bitcoin. Your 10-year 4.22%, with a 2-year 3.92%. Spot gold down $16 the ounce. The precious metal down 0.6%, $28.92. And West Texas Intermediate crude 66.17 a barrel. WTI down 1.3%. Got to keep it locked into Bloomberg Radio and television for the very latest on these declining markets. BioNTech expects sales to fall again this year as the German biotech continues to work to bring its experimental cancer drugs to market. BioNTech shares, they are lower right now by 2.5%. Recapping, S&P down 2.3%. Balance of power continues. Back we go to Washington once again. Joe Matthew, Kaylee Lyons.
All right, Charlie Pellet with the latest on the markets from New York. Thank you so much. We're following closely from down here in Washington as well, as we consider the policy emanating from Washington and the Trump administration specifically, and how it is influencing the market activity that we're seeing. Clearly, Joe, the market is spooked by the idea of tariffs, the growth impact potentially they could have, the layoffs in the federal government as well. My question is, other than President Trump not ruling out a recession in an interview that aired yesterday, talking about a transition period for the economy, we haven't gotten the announcement of new threatened tariffs.
Correct.
There hasn't necessarily been a firm new catalyst for today's selling pressure. It just seems to be a continuation of what was increasingly a risk-off feel in financial markets.
Got a lot of broken charts out there, and to your point, the president had two opportunities to suggest, number one, we're not going to have a recession, two, not going to have a government shutdown. He allowed for both possibilities. We have retaliatory tariffs that we're talking about now, and it's not even April 2nd yet, Kaylee. That's when the tariffs are supposed to get real. So you look at this market and wonder how much further we could go, and that's why we wanted to spend some time with Mike Regan. Bloomberg's senior editor joins us now from World Headquarters in New York. Mike, how are you reading this? I found it interesting that Mike Wilson at Morgan Stanley put a call out today, 5,500. Be the new bottom for the S&P 500? Is that what we're in for?
Well, hard to say, Joe, but I do think people are really sort of erasing their targets for the year end and really trying to figure out exactly what you're saying, how low it can go. 5,500 wouldn't be too much more painful from here. But I think, today the real story is just Wall Street is waking up to this idea that if you think back to the first Trump administration, it seemed like the stock market would sort of be a limit on how aggressive he wanted to get with trade policies. And if there would be sort of a real dislocation in the stock market, it would possibly make him rethink how aggressive he wanted to get. I think the interviews and the comments this weekend where he said basically, there could be a period of transition and he wouldn't rule out the possibility of a recession really has everyone across Wall Street sort of second guessing how much the stock market, at least in these early innings of the presidency, matters to President Trump. It seems like he's willing to sacrifice some near-term losses in the market to get what he wants, to get these tariffs in place and to get sort of the measures he wants in place to reduce these trade deficits. So I think, it's sort of a big rethinking going on of exactly what Trump is willing to tolerate as far as economic and market pain, Joe, in the near term here.